Okay, everybody, how you doing? As you know, I'm Big Truck Series. You already come to me for advice with stocks and more recently cryptocurrency and real estate investment advice. So today I am so happy because I'm being joined by a fellow Berkshire Hathaway, um, what is it called, shareholder. And I saw her online. I saw her channel online, and I wanted to make friends with her immediately as soon as I saw her. I was watching a couple of videos. I started sharing a couple of her videos, and she's a resident. She's not too terribly far from me, and I basically wanted to bring her on, and we wanted to talk investments since now investing is the really big deal. Some of you probably saw the Berkshire Hathaway meeting the other day. Some of you probably listened to some of the things I've been saying about inflation. Some of you have probably been listening to some of the things that I've been saying about cryptocurrency. So, without further ado, I want to introduce you to Michelle Marki.
Hi there. Thank you for having me.
Okay, yeah, it was great to have you. So, Michelle, tell us a couple of things that you feel okay telling us about yourself, and just to start us off.
Well, I'm a millennial and I got into investing as a teenager, but I didn't really invest well back then. And I got really into trying to figure out how to invest in my mid 20s because I figured I'm working hard, I'm saving money, but what is the best way for me to be making this money work for me? And I tried listening to different kinds of podcasts, and that's where I came across what I felt to be a life-changing experience of listening to a certain podcast that really got me started on investing, like Warren Buffett and Charlie Munger. So for that, I'm really grateful.
Speaking of life-changing videos, there was a video. My credit when I came out of college, my credit was a mess. I had like a 530 credit score. There was a video that I saw. I don't know if the YouTuber's still active. It was called "The Sage and the Spirit," and he explained how credit card interest works against you. And just watching that video was able to turn me around. And now I think I shared it with you. I was able over like what 5 or 6 years to build a perfect 850 credit score. And
Congrats.
I've been telling people who watch my channel, it's like they can do it too. They
Yeah.
just have to be very, very disciplined about how they use their credit card because not using it doesn't help build a score.
Yeah.
I've had friends who had no credit cards and they had zero scores. They actually have a zero score, and I've seen it on the credit report. And they
Wow.
were being given worse interest rates than somebody who had bad credit. So,
Wow.
what was it that you specifically saw that turned you around?
Well, I mean, I've generally been pretty good about using credit cards. When I was a teenager, I got onto one of my parents' department store credit cards, and as an authorized user, that helped me to start building a little bit of credit. And then when I was 18, I was excited to open my first credit card. I think it was like maybe an American Express Blue Card, which I'm sure a lot of people have, and they've used that. And the one main reason why I've stopped using that card is because I think I had to hit a minimum of $25 worth of points in order to redeem it. So I've kind of migrated to another kind of card where I can redeem cashback rewards for amounts less than $25. But I'm forever grateful for that Amex card getting me started.
I have that American Express Blue Card. It's the one that you could see through,
Yeah.
right? It's the
Oh,
transparent.
yeah. Yep.
So my limit on that is only like $500 because I've almost never used it. They threatened to take it away from me, so I went out and bought like I think I bought some gum or something on it, and then I paid it right back, so there was no interest.
Yeah.
But
Right. They took it away from me. I didn't use it anymore.
oh, they took it away. What credit
Yeah.
card do you prefer to use now?
Well, I use random Chase type credit cards usually. Like the Freedom is kind of helpful for me. It helps me get cash back. But and this is not sponsored. I'm not trying to push
No,
Chase.
we're not. They know
There's
we're not sponsored.
Yeah, there's a bunch of great credit cards out there. So I think it's whatever works best for you and whatever ways that you enjoy getting rewards because I like getting travel miles and cash back. Those are my favorite things, but maybe some people like getting a Chipotle or Starbucks card that's, redeemed from their points. So whatever you like. I mean, I think that you just got to find a happy medium between a card that's practical for you, whether you use it a lot for dining or traveling or grocery shopping or gas, whatever fits your lifestyle. I think you'd be good to go with that.
I personally use two main cards. I use Capital One Venture because I like to fly and I usually fly business class, so I try to save up as many points as possible. And I use Apple Card because I have a
Oh,
phone and Apple Watch and whatnot. So I felt that those were pretty much the easiest ones to deal with. But yeah, as long as you spend on them and as long as you repay it almost immediately, I never run revolving balances. It it builds your credit in no time, and eventually you pay down your other debts because you learn the discipline of paying down your other debts, and eventually your credit score starts to go up. And that's
agreed.
yes. Okay. So basically, the main thing that we were going to talk about was Warren Buffett style investing. So
Yep.
here's the thing. I've gotten a lot of feedback. I got a lot of arguments and pushback from a lot of people who prefer to go after cryptocurrency because that's the new big thing. Now, I'm not saying that people shouldn't buy cryptocurrency at all, but what I am saying is that dividend paying stocks in companies with long term good reputations, in my opinion, that is better for long term growth. And cryptocurrency, although thus far we've seen some of them grow very well, I don't really feel comfortable with them in general for very long term growth. Not such as investing in Microsoft, Apple, or say even non dividend payers like Google, Amazon, and whatnot. So the question that I was going to ask you was, you personally, especially you being a millennial, you personally, how do you feel about the current financial markets, and what do you see that bothers you?
Oh, well, that's a loaded question, and I'm
And
glad
you
you
got as
asked
much
because
time as you want to answer.
there's a lot to talk about here with everything that you just brought up. And I'll actually be posting a video tomorrow at around 6:30 where people can see how we got to this point of what I consider basically to be in an everything bubble where across housing and crypto and stock market and electric vehicles, where everything seems to be just skyrocketing limitlessly. And I explained why I think we're at the place we are and why I think it will keep going until something major happens. But we still got plenty of time until that major thing happens. So please be sure to tune into that video tomorrow. And when I said 6:30, I'm referring to Eastern time, just in case we have some watchers all over the country and world. Maybe you may have some followers from all parts I can imagine. So I look forward to kind of getting into why I think it's a bit of a bubble, and I even have an older video that I explained why some things were already in a bubble, and that was a video from early March. But in any event, the cryptocurrency scene is becoming super popular because people want to escape some of the inflation that's happening and how American dollars might be devaluing. So what that means is your purchasing power of the American dollar is going down like every day. Maybe today you bought a gallon of milk for $4, and then tomorrow you got to spend $4.50 on it. And usually we don't see inflation hitting us that quickly. But then you come to realize, like, my gallon of milk just got more expensive when I was trying to buy it tomorrow. And, it's kind of not so great. So to avoid some of what might be happening with the US dollar getting less valuable, people are trying to put it into alternative assets. And some people can think of cryptocurrencies as maybe assets. And as a disclaimer, I'm not invested or I'm not into any cryptocurrencies because I'm a little bit afraid of what could happen. I mean, I didn't want to jump in back in 2016 and 2017 when a lot of people we're starting to buy a lot of Bitcoin. And I'm not about to change on that either, just like how Warren Buffett and Charlie Munger are staying out of it, because I honestly don't know what's going to happen. Like, if people want to kind of treat it with a grain of salt and kind of just see what happens, then go for it. If you kind of want to look at it like it's a gambling kind of fun game, then maybe you'll win at it. But everybody is sort of just speculating, and I'm not trying to pass judgment on whether it's good or bad. I just don't know. And because I don't know if the governments will someday take it away, like I've heard Turkey and China taking away cryptocurrency, that makes me wonder, like, even if you're a crypto millionaire in one of those countries, you can't really use it there. And if you do use it, maybe there could be criminal penalties. So then you might have to flee that country to be able to use your crypto assets. And, maybe you can eventually go to a country that you can use that stuff. But just like the United States took away a lot of people's gold in the 1930s, 40s, there was a time when the government was basically trying to collect back the gold, and then they would exchange that for dollars. So imagine if a similar scenario happened with cryptocurrencies and suddenly you couldn't really use them for what you thought you originally could. And as good as it could serve as an alternative to the US dollar and other fiat currencies, because governments have the power to take it away, that makes me kind of just not want to go into it. So, like you said earlier, investing in the long term in public companies, I think people can feel a lot more assured about, and that the government wouldn't take that away, even if it gets crazy. And even if we have to have, say, some pauses in the stock market. There could be times when stock markets have been shut down for days, like back in the Great Depression. I'm pretty sure the stock markets had to be closed because they were just going crazy and people were trying to take out their money and everything was like nuts. So in that way, there might have been a shutdown for some days, but the markets would come back and you can eventually get your money out. But with cryptos, if one day someone takes them away, I just don't know what would happen. So going back to more of the investing questions that you have about dividend stocks or not dividend stocks, either way, what you want to see is a company that's growing. And that's what Warren Buffett and Charlie Munger like to focus on. And they're actually interesting. You say that, you've seen Buffett invest in some dividend yielding companies. And that's kind of just a byproduct of how that company has been set up. Like, for example, Coca-Cola, that's what they're used to doing. So they're used to giving out that dividend, and everybody has come to expect it. Whereas with Berkshire Hathaway, he said that they had a vote. Like he mentioned this on May 1st when they had their annual meeting. They have given out, they've done a vote, and the shareholders voted that they didn't want dividends from Berkshire Hathaway. So that's why it's never given a dividend if you look at it. But that doesn't mean that it's less valuable just because it hasn't given out a dividend. Like what you can think of that as is it's one form of giving a cash distribution. And you could have a few ways that companies give the shareholders a cash distribution. One way is by giving out a dividend, like a lot of people are accustomed to with stocks like Verizon and ExxonMobil or Starbucks. Those give out dividends for sure. And then other ones, like for a long time, Apple didn't give a dividend, and neither does Berkshire. And there are plenty of others that don't give a dividend. But instead, what some of them might do is buy back their shares. And I know Apple now gives a dividend, so I just want to clarify in case I might have said something that's confusing. But what they can do, Berkshire and Apple both buy back their stock. And that's another way of kind of giving back value to the shareholders, because now by having less outstanding shares in the market, that means that each shareholder actually owns more of the stock than they did before. So, for example, like Buffett wrote in his 2020 annual letter that they originally only owned 5.2% of Apple, but because Apple bought back some of its shares, now they own 5.4%. So that's an increase of 0.2% more of owning Apple than they did before. And they didn't even have to do anything. Berkshire didn't buy more stock. They just were invested, and Apple did the work of kind of rewarding the shareholder by buying back its stock. And that also helps. If someone doesn't want to be invested in that stock anymore, they could always sell it, and then they take out their share. And what that means is that that person is benefiting from having maybe made a profit from having owned that stock for some time and then selling it. But then everybody else who didn't want a dividend, they can still stay in that stock and then continue benefiting from either future stock buybacks, or if the company is growing and even if they don't buy back their shares, but other people recognize the value of that stock, then they still benefit by owning more of it. The only time where it's not good to do more share repurchases or buybacks is if you don't really know what the value of the company is. So let's say there's a CEO that's just buying the company at whatever nosebleed prices there are, and that's not actually a true reflection of what the company's value might really be. It would be like, let's say, when GameStop was at $400, and probably a lot of people don't really think GameStop was worth $400, and now I think it's come back down to somewhere close to 100. Don't quote me on that, but I know it's come down from where it was at its all-time highs. But when GameStop was at 400, if the CEO would have bought back the shares at that 400, that could be like just burning cash. You're just like kind of throwing it away if that's not a true reflection of the value, or if it's not a good deal. Whereas, like, let's say the CEO was buying back GameStop stock at $4, that would be a great deal, knowing that, or maybe not knowing now, that it would have gone to where it is and at being a 10 or 100 times more than $4. So that might be a little bit of a long-winded way of trying to kind of explain the kind of good and bad behind dividends and buybacks. But either way, if you've done your homework and kind of looked at the financials behind the companies that you're interested in buying, and you've determined that you think maybe in 10 years or more that that company will still be around, and even if it's not growing that much, that it will still be throwing off cash, that's what you're looking for. You want to look for a good company that will be around in the future and that will continue to do good for society and be sustainable. I know a lot of people care about the ESG, environmental, social, and governance factors. So it's important to look for some of these things when you're evaluating if there's a good company out there that will be good for you and the planet and your portfolio. So I know I said a lot there, so I want to give you a chance to react to some of what I said.
You know, you mentioned GameStop. Most of the people who watch my channel for a long time, they know that I was mocking Redditors and GameStop from the very beginning. Basically, everything that it looked like to me. First of all, we both know. I don't know if you've played video games or whatever, or bought video games, but we both know GameStop is not a $300 a share operation. I'm pretty sure we understand that. When I first heard of what was happening, and I saw that these people were using social media to get people to basically invest these stimulus checks into the Reddit stocks, I was screaming pump and dump from the very beginning. Because to me, as soon as I heard the basics of it, I was like, wait a minute. You guys will never be able to take on multi-billion-dollar hedge fund managers with connections to the government and win. So from the very moment I heard, as soon as I heard the situation, I was like, yo, this is a pump and dump. That was my first thought. Sure enough, right now, GameStop, in fact, I looked it up, it's $160. And the scary thing is that when GameStop was $300, I had people and clients, because they know that I know a lot about making money in the market. They were calling me and asking me what's the easiest way they could buy GameStop, and I told each and every one of them, stay away from it.
Wow.
I made videos about it. I told them all, stay away from this. This is going to end badly. So sure enough, anybody who purchased above, $175 has lost a lot of money. Now that leads me into this conspiracy theory that I did have. I believe, because normally, and this is the thing, now I've lived abroad and I've been to a number of other countries, and normally America outsources inflation by taking useless cash dollars and trading it for manufactured goods. For example, if I walk into a Walmart right now, I can buy like a 70-inch television for $500 or less.
Okay.
They're churning out electronics. They're
Hmm.
churning out all of these cheap products. So America is able to print money, but outsource it that way. However, once the people in most of those other countries get a hold of that cash, they really can't spend it because there's nothing to spend it on in their countries. Otherwise,
Oh.
they lose value.
Hmm.
So what ends up happening is most of those other countries, they bring that money to America and they purchase up our real estate, our
Hmm.
houses, our office buildings, and such and such.
Hmm.
But now, during the pandemic, they were passing out all these money and stimulus checks. There was no place to really sink that money and get rid of it because, there's not that many things to buy. Most of the stores were closed.
Hmm.
So my thinking was that a lot of the stimulus check money, the government, and along with social media and along with a lot of the media on television, has basically suckered people into putting that money into cryptocurrency and into the stock market. If the government really wanted to, they could have made it so that we never would have been able to spend that money gambling. They could have put it on debit cards and they could have made us own every single purchase and they could have checked it on our tax dollars. If it was me and I was running government, that's what I would have done. I would have given everybody a debit card. You can buy food, clothing, stuff like that, basic stuff like that. Baby formula, diapers, things like that, right? So, in order to make sure that we didn't go to the stores and strip the shelves bare, a lot of people, especially younger people, I believe have been coerced into putting that money into the stock market and specifically into cryptocurrency. Because most older people were not going to go into cryptocurrency. They wouldn't trust it. They would,
Hmm.
however, trust stocks. And that's been my belief. I don't know. What do you think about that?
Well, I mean, it's a very interesting theory. I mean, I, as we probably know, a lot of international groups are very interested in buying American assets because they tend to retain their value more than maybe the country of origin. So, very interesting. I have no idea what could be the case with folks who might have US dollars and not know what to do with it or put it in. But I can imagine that there are still people just trying to buy up a bunch of real estate as much as they can and buy real things like buying into the stock market as well or buying gold. I'm sure people are putting their money in every possible thing that they think might have value and that might be kind of holding its own against some of the inflation that we're seeing. And even Buffett and Munger have acknowledged that we are seeing inflation. So that's definitely something to keep an eye out on. And with regard to the stimulus checks, I mean, I think that they were probably just trying to get out money as fast as they could. So it probably wouldn't be super feasible or easy to just be mailing out debit cards. I mean, I don't really know for sure, but I'm assuming being that they print out refunds on checks. They probably just had the press up and running and were like, let's print out all these stimulus checks. So I think because that's just the way things are set up, they opted for that. But I think that they really just wanted people to spend on anything. It didn't matter what. Like, so everybody's obviously free to choose on what they put the stimulus check money in. And hopefully people would put it into prudent things like you talked about if they need baby food or groceries, whatever, or toilet paper, whatever important stuff we need in our daily lives. I would hope that people would prioritize those things. But we have also a lot of people who were bored at home and they just wanted to figure something out and maybe out of some boredom, just like some people participate in fantasy football leagues, and it helps to pass the time and it helps to kind of guess what players will perform well. Maybe another way to kind of just speculate and do something as a game might be to put it in something like Dogecoin. And I don't fault people for doing that. Like if you want to have fun with Dogecoin, if you're enjoying seeing where it goes, if it will hit $1 or not, if Elon Musk tweets about it or talks about it on Saturday Night Live, I can bet some people who are in having their money in Dogecoin are probably going to be stoked if and when Elon Musk says something about Dogecoin on Saturday Night Live, and then it starts going to $1, and then people are like, "Oh, great! Now I've made so much more money, and I can send my kid to college." I mean, if that's you and you're able to speculate and win at that game, I tip my hat off to you because that takes a lot of guts to kind of just see what happens in that. Like, I don't have that kind of level of bravery to be able to gamble. So, I mean, this is just my personality though. Like, if I go to Vegas, I consider winning to be doing something like finding $20 on the floor. And that's my extent of participating in anything in Vegas. Like, that actually happened. I did find 20 bucks, but I didn't go and put it in any slot machine. I just held on to that 20 and I felt good for actually being up while I was in Vegas last
Wait.
time I was there.
You found $20? Like, how did you
Yeah.
find $20?
Like just walking in the casino floors. Like
Really?
just yeah, it was just on the floor. And
Wait.
like
I have a question. Did you see the movie Casino with Robert De Niro?
maybe it might have been a long time ago. Why?
Do you think maybe it's possible that while you were in the casino, that one of the crew bosses probably purposefully dropped it in order to get you started and to see if you'll gamble that away plus more?
I mean, maybe you never know, but I mean, I didn't go for it, so I just tucked it away in my wallet and then moved on to, this conference that I was there for. But, I don't fault people. If people want to gamble, that's your right. Just like Buffett says, it's not shameful, it's your right to gamble, but just be mindful of what it could be. Like the only foolish thing would be if someone really thinks that some of these cryptos are a good long-term investment. I mean, you could be right, but right now it's so new and so volatile that I don't consider it a long-term investment. Like I could be wrong, but I feel a lot safer with investing my hard-earned money in the stock market and maybe real estate or maybe other things that I think are legitimate. And that's where I try to stay. But I'm not trying to anger anyone. Like if you're really into crypto and you believe in it, like I just give you all the props and wish you well, and I hope everything works out.
Let me tell you something. I think we both know Dogecoin started as a joke. I think we both
Yeah,
know that, right?
for
But
sure.
now, eventually, the joke becomes real because right now, Dogecoin is worth more than Ford Motor Company, and it's worth more. I think, if I'm not mistaken, than I like part of Yeah, Dodge is worth more than Ford and General Motors. Now
Wow.
that's terrifying when you really think about it because it started as a joke. Most of the people who are trading it, I'm pretty sure they have no intentions of paying their taxes later on this year or next year. And it's grown so big as a joke that now it's worth more than Ford or GM. Now
Wow.
that's kind of, that should I'm surprised that the SEC didn't do what they did to Ripple and try to like do a cease and desist. But
Oh,
when I believe in one of those economic principles that the government pays for what it gets. So my thing is, if the government sees that this is happening and they do nothing about it, then in my opinion, they must want this to happen.
well, I mean, we kind of are in an Alice in Wonderland world, and it makes me wonder, like, what is this all leading up to? Like last year when we had the March 2020, you know, shock, there was a lot of people running on money market funds, right?
Yeah.
So I kind of feel like the US government might let this happen, like let it continue going on until something really bad happens. Like so far, we haven't had something really crazy happen yet. So I don't know what or if anything will happen to change what's going on there. But I think it's going to take some kind of important event. I don't know what it would be, but something like, let's say we have another crash of some kind, like if the Fed decides to raise interest rates and then people decide pumping the stock market up is not as fun as, I don't know, investing in farmland, then maybe something will change where suddenly, if I don't know if cryptos track alongside indices, like I haven't like measured this, but I'm just taking a wild guess that like as soon as the game of musical chairs comes to an end, people will start running for the hills and start kind of like just looking for cover and converting their money back into something that they know they can buy bread and milk with. Like, I really think that that's what's going to happen because, I mean, so far, like if I go to my local grocery store, I don't, I'm pretty sure I can't buy bread and milk with any crypto. So, when you really need to have something to survive, you'll go back to owning stuff that the government actually recognizes and that you can actually trade for surviving, which is like buying food and water and all that. So, yeah, who knows what's going to happen? I mean, I'm kind of like how Warren Buffett and Charlie Munger are doing. They're just enjoying the movie the way it's going right now. So that's what I'm doing. I'm just trying to sit back and enjoy it for what it is.
Well, it's funny, like because I was thinking too. Everybody keeps saying a crash is coming, a crash is coming.
Mm.
Now, you mentioned the Federal Reserve possibly raising interest rates, and I absolutely do not think that's going to happen. We watched quantitative easing go on basically since what, 2008. And now we've printed what? Almost $9 trillion, I believe, 6 trillion. We're on our way to $30 trillion in debt. As far as I can see, the Federal Reserve has pushed itself to a point where it can't raise interest rates because it would never be able to service the debt, which is something that, we were warned about by Ron Paul and most libertarians back in 2006, I would say. And I believe the comptroller back then, I know I saw him on TV with Glenn Beck back when Glenn Beck wasn't crazy, but I don't think the Fed can raise interest rates. And
Not anytime soon.
I don't think anytime soon. I don't think anytime ever. I don't know if you listen to Peter Schiff, but Peter Schiff himself believes it too. Now, I learned about it before Peter Schiff because I listened to Ron Paul talk about it and I listened to the libertarian side of it. But interest rates at this point, I don't think can be raised because if they were raised at this point, it would cause problems servicing the national debt. But on top of that, people wouldn't be able to spend as much as they're spending now because obviously credit would become more expensive. Right now, for instance, buying a house, if you can even find a house to buy, because the corporations are buying up houses now. They've been buying up houses since 2020. And I believe the number is that they're buying like 2 or 3 out of every 10 houses. But the only reason why they're doing that is because right now, they can beat the cost of inflation since the interest rate is 3 or below, or especially on a 15-year, it's below a 3%. So as long as you're at a 3% or below, you can beat the cost of inflation. The thing that I was thinking about, especially inflation, because I listened to what Buffett and Munger was saying about inflation. The inflation that we're seeing is obviously due to the fact the government's printing money, and it almost seemed like some people weren't willing to actually just come out and say that. But it's due to 2 things: the printing of the money and the Federal Reserve keeping the interest rate artificially low. Because as we know, when the interest rates are low, people trying to apply for mortgages rises, but when the interest rates are high, people applying for mortgage rates drops. Because there's an inverse relationship. Mm-hmm. So I don't think, me personally, I don't believe interest rates are going up anytime soon, if ever. I'm pretty sure that what we're really going to experience, if we're not already in it, is stagflation. Mm. And a lot of people don't talk about that word. They don't use that word. I don't think they've used that word since the Carter administration. But I believe what we're in right now is stagflation because you've got high unemployment, high underemployment, you've got high inflation, finally everybody's talking about now. And then on top of that, you have poorly targeted government programs such as the stimulus checks. So when you factor all those together, that becomes stagflation. So that's where I think we are right now.
Well, do you think what would you consider to be high inflation? Because the last I checked, the consumer expenditure index that I think price consumer expenditure index, the PCE inflation measure that the Fed uses, that was at like 1.6% as of maybe February. It hasn't yet gone to their target 2%. Yeah. So what do you consider to be the right level of inflation that would indicate stagflation.
You know what? You know what it is? The problem is, first of all, I don't trust the government's numbers. But even if I did trust their numbers, you tell me, when you go shopping, what have the prices been like for you? I'll tell you like this. Lumber prices have tripled. So right now, people would like to build homes, but they can't afford it because now the lumber's 3 times as high.
Mm-hmm.
Copper pipes, all of the building materials have increased. All of
Mm-hmm. Right.
them. Food prices, in some cases, have gone up. How much are you paying for gas?
Well, I mean,
In fact, let me ask you
when
this. I'm sorry, I didn't mean to cut you up, but what kind of car do you drive?
I have a Japanese car that's efficient on gas.
Oh, okay, that's a perfect answer. But what kind of car is it? Toyota, Honda,
Honda.
Accord?
Yep.
Okay, so you're getting really good gas mileage, but you've probably noticed that your gas prices have increased.
Yeah, but it's just only gone up to like $2.75 a gallon, which
You
is
use
a
you
lot
use
better than
regular.
other places in the country.
Well, well for you're in Jersey, and your taxes for gas, as far as I know, I used to like to go to Jersey to get gas and to fill up, but at this point, I think it's actually cheaper for me to go to BJ's. I think because see, I can only use premium because I use like supercharged Hemi gas guzzlers and gas
Wow.
guzzlers in general. So the problem is my cars only get like 10 miles to a gallon,
You have
but
a Hummer?
no. A Hummer, I think, is about 9 or 8 or 10 miles. So I'm getting the same mileage basically a Hummer H2 gets, but I'm
Mm.
not as bad as one of those diesel Hummer H1s, as far as I know that the military uses. But
Uh-huh.
ultimately, I have a gas guzzler. I can't do like I kind of like Hyundai's more than Honda and more than Toyota. I like Hyundai because I like the style. I think that's just my personal. But gas prices have gone up significantly. A lot of people just tried to blame the Biden administration. I was trying to tell them, no, gas prices have been going up since last year. Because if you remember when gas dropped below negative, that's when I went out and put a lot of money into oil companies and stocks like Sunoco, Exxon, Chevron, BP. I knew gas prices were going right back up after they dropped to zero, but they only dropped to zero because the airlines weren't flying, the cruise lines weren't moving, and everybody was quarantined. So as soon as I saw that happen, that's when I rushed out and put money into the stock market. But gas prices were going to go up anyway,
Mm-hmm.
especially due to what I consider the real inflation. The real inflation is the cost of living increases because that in and of itself becomes a tax.
Mm-hmm.
So you tell me, what kind of cost increases in goods and services are you seeing?
Well, I mean, the one that stands out to me would be coffee prices. Like, I recently watched a Wall Street Journal video about how coffee prices are going to become way more expensive. Like, if 5 years ago you could get a latte for $4.50, it's going to over $6, which I'm like, kind of afraid of seeing that number, like that sticker shock of seeing, buying a latte for almost $10, let's say, depending on how many shots of espresso you put on it, just seems insane to me when you could be getting, of course, much cheaper coffee. But some of that is also not just because of inflation, but also because, unfortunately, some countries like Brazil had a not great crop last year, and then they kind of might be having to increase their coffee prices. So it looks like maybe um, we'll see inflation hitting a lot of things that we every day consume, like coffee. And I'm not looking forward to that point in time because we can't buy as much as we used to with our unfortunately devaluing dollar.
Well, coffee, I know, was definitely going to go up. I think also chocolate. Um, um, there were a number of other things, but basically the commodities. All
Mm-hmm.
all commodities have steadily trickled up. In fact, some people buy water futures; those have been going up too. Water futures, gold, as you know, silver, precious metals in general, copper. That's how I measure inflation, because ultimately inflation isn't on the money. Inflation is on the rise of the prices required to buy the products and services.
Right.
So the government's way of talking about it, because I watched Jerome Powell last night, and it seemed to me like he wasn't telling the truth. That's what it seemed to me. And now we see the high we see the higher economists and people specifically saying, listen, we're seeing inflation, but they're seeing it in terms of housing values rising, skyrocketing. They're seeing it in terms of the goods and services. So ultimately, regardless what the government says about inflation, it's like I see the cost of living inflation as the true indicator.
Right. And I wish we had a way of really measuring that, like to really know. And it always puzzled me, why do they exclude food and energy prices out of what they use as the inflation measure? Like I feel like that's a tremendous way to really know for sure how much things are growing every year. And I mean, like I see the effect of inflation in things like if I'm driving past a pizza restaurant and last year it said for takeout $10 for a pizza pie and now it's at $12. I mean, boom, that's inflation right there, a $2 markup. And like last year, you could get that same takeout pizza for $10 and now you're paying $12. So, I mean, inflation is all around us and it's happening in our everyday lives. And I feel like there's not much that we can kind of do to kind of get that under control until the Fed feels like things are hitting the mark on what it's expecting to see on whatever their official measurements are. So we would see them wanting to have unemployment go to a rate similar to what we had before the pandemic, where if it gets to like 4.5%, then maybe it will could be considered that we're at max employment again. And I know that there's still a lot of people who are going to be underemployed at that time, but that's what the Fed is looking for. They're looking for that number. And then if their PCA inflation index goes to 2% or higher, then that will make them happy too. And then, you know, like you mentioned, Jerome Powell, he was on 60 Minutes a few weeks ago saying how the way that we're spending in our fiscal deficit spending is not sustainable. And eventually it will have to be brought under control again. But it's obviously a double-edged sword because if they do raise interest rates at some point, then obviously it's going to be a lot more expensive to service our national debt. But what will be kind of like at that point, what choices will you really have if the economy is kicking back into full gear? We have what they consider max employment and everything looks fine. I mean, they tried doing this back in 2017 and 18, where they tried reducing the assets on the Fed's balance sheet and starting to raise interest rates after 2015. I mean, we saw this happening until obviously they couldn't raise interest rates when the pandemic hit. But we saw a steady stream of like gradual, small, you know, they gave plenty of heads up that this was happening, that interest rates were rising. And as soon as it got to a point that the stock market didn't like it, then the stock market threw a tantrum, as we saw at the tail end of 2018 when stocks were just going down and we didn't have a Santa rally that year. So until the Fed said we're going to chill out on raising interest rates, that's when the stock market breathed a sigh of relief and continued powering on. But it's going to take that. It's going to take someone to realize that maybe we're spending a little bit too much and maybe we need to raise rates because things are overheating with inflation. And by that point in time, I hope that our economy will have recovered enough and enough people will have been employed. And of course, if we have a major downturn, it's going to be unfortunate if some people lose their jobs again. But what I'm really hoping for is that for the most part, things will be relatively back to normal by that point. We won't have as much of a concern about the pandemic and the COVID variants that there are, and that hopefully the big pharma will have figured out whatever booster shots we need in order to kind of get back on track and kind of just have everyday normal life again, even though it's going to be in a world where we are dealing with more inflation. But again, if we see interest rates go up, then maybe housing will also chill out, and we won't have as many people kind of running around like chickens with their head cut off trying to get a house in this kind of environment where it would be fantastic to have a mortgage with low interest rates, but there's almost no inventory. And even if there is, with people bidding more than $20,000 to $100,000 over asking, it just doesn't seem sustainable. Like it doesn't seem like we can continue to have this Alice in Wonderland environment of everything hitting their all-time highs continue for forever into the future. At some point, it's going to end, like I think that Buffett and Munger are kind of predicting.
Well, you said just now people bidding upwards for these houses. But the
Mm-hmm.
issue that I see is corporations and multinational corporations or conglomerates are the ones doing that bidding. And I live in New York City. So
Mm-hmm.
here in New York City, like for example, I have an aunt right now who has a brownstone in Brooklyn, and she's not far from the Barclays Center. For a
Mm.
basement studio apartment, she can charge $3,000 to $3,500 per month.
My
Uh,
God, wow.
the people who she has living there, she's only charging them about 25 or something like that. And even my tenants, I try to be fair to them. They're college students, and they go to Hofstra. So what
Mm-hmm.
I do is I charge them way less than Hofstra would charge them, but by having more of them, I was able to make enough money to pay the house off early.
Well, it's great.
Um, so my thing is, in the future, especially when it comes to Generation Z and Generation Alpha, from what I'm seeing now, most of them are going to end up being lifelong renters because they're not going to be able to get a mortgage. First of all, they're not going to be able to get the jobs necessary to have the stability and the income to have a mortgage, because a mortgage is difficult to get, and it's even more so difficult now. The last property that I bought, $299,000. If I tried to sell it, I got a phone call not too long ago. There are corporations calling me trying to buy my houses, and I'm like, well, first of all, I can't sell because then I'd be homeless. I wouldn't have anywhere to live. But they
Mm-hmm.
are going over the asking price, and they're offering cash in
Wow.
order to buy you out. Like I told my aunt, her house, for example, $165,000 like 30 years ago. Right now, she could sell it for $3 million easy. And I
Wow.
said, yeah, I was, as a joke, I was like, yeah, you should just slap a sign on it and says, yeah, I want $5 million cash. And I guarantee her by the end of the week, somebody's going to be there with a briefcase.
But then
Somebody.
where's she going to live, right?
That's the problem. But now
Yeah.
here's the thing: if you take $5 million, I'm pretty sure you can find a place to live if you took $5 million in cash.
But
Maybe.
you gotta like decide what's the trade-off worth it. Do you have somewhere else that you would want to live, or do you live already in your dream location? Like that's the hard part to decide is, sure, you could be making bank selling houses, but then what? Like what's your long-term goal? And then if you try to buy another house, you might just be in the same situation that someone else was facing where they're being outbid and they can't get back into uh, like a consistent living place. And I also want to remark on what you said about the potential Gen Z and even millennial situation in the future. We could be looking at, like, I think there was some article mentioning how future returns might be very low, and that's scary. Like, if we have a generation of renters and with stock market returns being low, you know what that's like? Are people who live in Europe, where a lot of them have no choice but to rent, and they're used to their stock markets not really performing that great. And we got to ask ourselves if we as an American country want that to be in our futures, if that's the kind of thing that we think we're looking forward to. Because the last I remember, that's not really the American dream. The American dream was that you could have good paying jobs, you could have a house to call your own, there's plenty of land to go around with everyone for everyone. But like if we end up putting ourselves into a situation where the future generations are kind of in a bad place, like stuck between a rock and a hard place, that's not going to be fun. So I know you say the Fed isn't going to raise rates. But I mean, if you had to choose between corporations continuing to buy houses and the American people getting the chance to have and own a house, I think that the Fed better raise rates so that corporations aren't just, endlessly borrowing money at such low interest rates, because right now they can afford it, but the day that they and whoever bought houses that they couldn't afford the interest payments on, the day that they have to pay the higher interest rates on that, that's when there will be a reckoning, and then maybe some of those corporations will back off and kind of like let the people have their houses again, because it just doesn't make sense. Like it just feels like it's not right if American people can't have a right to own a house or own a home or a condo or apartment, whatever they want to have in their life.
But no, well, the way we're seeing the exact same thing. Now, again, and you're talking about Europe.
Mm-hmm.
The crazy, see, here's the thing here's a question. Do you consider, or I shouldn't say consider, are you registered Democrat or Republican?
Well, I probably don't want to anger anyone, so I'm going to stay neutral on this.
You're going to stay neutral. Okay. Well, everybody on my channel pretty much knows me well enough to know that I'm actually a Republican conservative, but not like these new people. I'm a fiscal conservative Republican, right? And when you talk about Europe and you talk about how things are in Europe, where there's very high taxes, there's less ownership in most cases, right? In some countries they're going back to austerity because their economies have collapsed, especially with this pandemic. Ultimately, my thing is, again, I really do not believe that the Federal Reserve can raise interest rates. I don't think they can at all, specifically because of the national debt. Also, because if they raised interest rates, it would cause serious problems with consumer spending. So
Yeah, they're not going to do it anytime soon. Like I said, it's going to take a long time before they do.
But now, Michelle, here's the thing, and I'll say it like this: when I bought my second house in 2018, interest rates, the prime rate, even with perfect credit, the prime rate was a 4.75. They had just started raising interest rates, and even then, I was like, I would have liked to hold out, but now I'm glad I didn't hold out, because then I wouldn't have been able to buy the house because they would have all sold out. And I would have had problems dealing with the bank because of the pandemic. But I will say this, even at prime interest rates, it was a 4.75. They had to drop it. And that was in the last 2 years. They had to drop it again. And where are they now? They can't, as far as I can see, they can't go negative. As far as I can see, not like Europe.
No, Powell doesn't want to go negative. And
I don't think he can, but it's possible he could. If things got really bad.
Well, yeah, I mean, and actually, I did learn when Buffett mentioned in the annual meeting, he said that the other week or something like that, like the 4-week Treasury notes were at an almost negative interest rate, which is almost like hasn't happened that much yet. Like, so the fact that it could be sort of starting, even at something that doesn't seem very significant, could be, something to be warned about. And I mean, it just depends on like some of the will of whatever the people who are in charge want to do. The thing is, like, we can't always have our cake and eat it too. It's great for consumer spending. Like, I enjoy being able to, let's say if I, buy an expensive TV, and if I have it on a credit card with 0% APR, I can take my sweet time paying that off at 0%, because it's like I have a free loan for a year, right? Paying off that TV. But at some point, the good times are not always going to be around. Like, so I'm hoping that you were able to refinance that mortgage down so that.
Oh, I paid it off.
Oh, great.
I paid it off.
Like, yeah, that's awesome. For a lot of people, I'm hoping if they did have higher interest rates on their mortgages a few years ago, that now they're able to cash in on the rates going low and refinance it to even lower rates. So if you're in that position, then all the more power to you, because it's a great thing. And you know what? You're actually, by taking a long time, if you didn't pay it off, to to pay back that debt, your dollars are actually able to kind of like pay it down with a loan that's worth less with our devaluing dollar. So in a way, people who are getting 30-year mortgages now at these rock bottom interest rates, they can take their sweet time paying off their debt or their mortgage because there's no rush. Inflation is eating away the value of that mortgage. And, like you kind of like are doing well the more that you have real estate and you have good mortgage rates. Like it's a dream situation for a lot of people who were able to lock it in, as long as you hopefully also didn't overpay for what the value of that property was. Because if you ever wanted to sell it in the future and we have another great financial crisis and you needed to sell it in a pinch, I'm pretty sure those people didn't enjoy having to sell off or go into foreclosure some of the properties that they might have bought. So I know that lending standards are a lot stricter nowadays, and that hopefully for the most part people are buying houses and that they can actually afford. But it's like, at some point we will need to kind of, be kind of facing reality. And I don't know when reality will hit us, but I don't know, it just seems like it's sort of like too good to be true, everything that's going on right now. And when everything is too good to be true, like, like someone I saw in the comments said that they're afraid to sell their Doge because it's, just still going up. But then what point do you decide that it doesn't go up anymore? Or someone decides that the game is over? There will come a time when someone decides when the game is over, and when that momentum shifts, just like the rocket ship came back down on GameStop, you don't want to be, on the downtrend of that rocket ship, like when Elon Musk's rockets were coming back down into the launch pad, and then, is it not going to explode? Like, you don't know if it's going to explode or not. So
that's a good analogy. I never thought of that.
I mean, yeah, like how do you know it's not going to explode? So I'd rather not be on the rocket ship when it might explode. Like that's why I'm staying in a lot of cash right now, because I just don't really trust what's going on. Like I'm still a little bit invested, but by far, just like Warren Buffett is sitting on a war chest of a lot of cash, and he's got like over $100 billion of cash. And you got to ask yourself, if the greatest investors of all time aren't investing that much right now, why is everybody else investing? Why do we think we know better than the greatest of all times? Like, I mean, I don't think I know better than the goats. So if the goats don't feel like it's a good time to invest that much, I'm trying to take a page out of their book and then just like wait it out, just see what happens, because I feel like I might have missed out on investing earlier. Like if I would have dumped money into something like Apple and Amazon, even back in 2016 or even as early as 2019, maybe things would be fine and I'd be enjoying like reaping some rewards from that. But I missed out. And again, I acknowledge that maybe I should have jumped in a little bit sooner. But since I missed out, I'm just going to hold on until the next time I have an opportunity, when, like what Buffett and Munger try to do, buy companies or buy wonderful companies when they're on sale.
Okay, so let me say a couple of things real quick. As far as the whole refinancing thing, somebody else did a live stream and I was on it earlier, and they were talking about the impending rental evictions, the impending mortgage foreclosures. I believe a federal judge tried to slap down something Biden had put forward that said he was trying to hold off, make more moratoriums to stop people from being thrown out of their homes. So that was one thing I wanted to say. A lot of my family members who have mortgages, they've just refinanced to the lowest rates they could possibly get for the 15 years, because some of them have recently had children, and their reasoning is if they just pay their house off in 15 years, because they're already retired, they're on fixed income. If they pay it off in 15 years, by the time their oldest kid gets to college, they won't have a mortgage to pay and they won't have college to pay. The other thing, one of the people who donated a super chat, and by the way, so let me tell you, I'm thankful for Michelle for giving us her time. So any money that's donated, I'm going to be splitting with her later on. So if you have questions that you want to get posed directly to her, and you're donating in a super chat, just know that you're donating partially to her specifically. Somebody asked a question right here. It says, has Michelle read Security Analysis by Graham and Dodd? Somebody else says, oh, I love her. And I knew you would. That's the reason why I couldn't wait to get you on. I was like, somebody right here, they were like, oh, I love her. And I knew once we got you on, I was like, yeah, I couldn't wait to get you on. So have you read Security Analysis by Graham and Dodd? So that was a question to you.
You know,
Go ahead. Yeah.
So to answer that, I got to tell you, in my earlier 20s, I was trying to borrow some investing books from the library, and I'm pretty sure I borrowed this book and also Intelligent Investor, and I couldn't get through them at the time. Like, I think years later, I then tried to get through Intelligent Investor, even though I was like, this is so hard to relate to. But Security Analysis, I'm sure it gives good lessons and could be helpful to a lot of people. But I just think it's really hard to relate to. And this was probably back when Benjamin Graham was all about the cigar butts. And I'm not about cigar butts. Like, I once bought what I think is sort of a cigar butt company, and then it merged with another company, and I regretted it because I was like, darn it, just when I thought it was, almost pumping out a little bit of cash flow and on the mend, and it was, not as crappy of a company as everybody was making it out to be. Like, I'm not going to name what it is because I just don't want, any hate to go towards them. Like, I'm a big proponent of positive vibes, and I just want positive energy in the universe. So that's why I don't want to put down, anyone. I don't want to say anything negative about anything that could be a little bit controversial. So, unfortunately, that company didn't live up to my expectations, and it ended up being a cigar butt that didn't really, get to survive because it ended up having to merge. And he owned a lot of stocks, but a lot of the companies he invested in they just didn't really make it. And where Charlie Munger tremendously influenced Warren Buffett to change the way he invested to really become legendary was to invest in wonderful companies that he believed in would survive for a long time into the future. Like, if you look at some of the companies that are still around, that even though everybody was like boo-hooing a long time ago, like Coca-Cola, I know Coca-Cola has had its share of controversies, and I know there was the tax on the sugary sodas in New York City, and everybody was like, sugar's bad for you, and there are linkages of Coca-Cola to maybe some adverse health effects. And of course, we know all this, but you know what Coca-Cola did? They invested in water, and guess what?
Vitamin water.
Yeah, and also the fizzy waters.
Dasani, I believe.
What?
Dasani, I believe.
Well, yeah, Dasani, and also think about all the carbonated water that people drink now. They're still, Coca-Cola is still doing great, and I'm sure that's why Warren Buffett has never sold Coca-Cola, because he believed in it, because people got to drink, whether it's sugar soda or not sugar soda, everybody is still going to continue, getting their drink on. So no matter what, it's still a great company for Buffett to stay invested in. You have to ask yourself if it's at a good price to buy it, if you were interested in buying Coca-Cola. So, be careful if you just buy any company. It doesn't mean that it's available on sale at a good price right now, but maybe when it is on sale, that's a good time to buy your Coca-Colas and your Berkshires and your Apples and any other company that we're pretty sure will continue existing at least 10 years into the future. And it's very kind that someone said that they love me. I greatly appreciate it. And if you enjoy what I'm saying, a little plug, I'd love if you could please subscribe.
No, a little bit later, I'll let you share your webpage, whatever you've got that you want to share, because I already share some of your videos.
Thank you.
Yeah, I already share your videos. Now your last name is pronounced Marki, right?
Yeah, Marki, whatever.
What's your ethnic heritage?
So I like keeping this a little bit of a mystery. I will say that I am multi-ethnic.
Multi-ethnic, but like Asian, Italian, Hispanic. Oh,
I
you're
guess
not even see. You're not
I
even.
guess the world will never know. It's like what's at the center of a Tootsie Roll pop.
You got any Vietnamese?
Nope.
No Vietnamese. Okay. Asian?
Maybe.
Maybe. Oh, wow. So helpful.
Keeping you guessing.
Huh? No, okay. Well,
Keeping
we'll
you
figure it out
guessing.
sooner or later. We'll figure it out sooner or later. It says has okay, I have another direct question to you. So somebody said, are you Filipino? I wouldn't
Maybe.
I wouldn't have guessed that one right away. I would
I,
have
I know
okay.
people tend to look at me and I look a little like, like Pacific Islander
It's the
maybe, or
eyes. You have such pretty rounded eyes, and I'm thinking, that's why I thought like maybe Vietnamese. But
thank you.
somebody says, has Michelle watched anything from Peter Lynch or read any of his books? If so, how does she feel about his investing style? This is Roscoe.
I've heard great things about Peter Lynch. I have not gotten a chance to read his stuff, but I've heard he's also a wonderful investor. And, there has to be some kind of magic to what he must be doing because a lot of people say great things about him. And I want to ask Roscoe if you've ever heard of Ray Dalio, because that's an investor whose publishings I've definitely read. Like, I love visiting the Bridgewater Associates website and reading Ray Dalio's principles works. So if you ever read his principles, that gives you a lot of great investment knowledge and also management knowledge about everything that he learned from running his really successful Bridgewater Associates company. And I look forward to trying to learn more about Peter Lynch. So if there's a book of his that you recommend, I'd love to know so I can check it out. And then hopefully I can also give you feedback, or maybe I'll do a video on it on the future.
Well, see, me personally, especially to help you as far as you build your YouTube, when I do my YouTube, usually I end up responding to stories that I think are important or that I think people may have missed that they should hear. Like for instance, I talked about the corporations buying up houses, and I
Mm-hmm.
talked about the things that I see as far as while you're doing your YouTube, obviously the best thing to do is be yourself, obviously. But when you're seeing things that happen that you think are important, that you think are overlooked or missed, those are the stories that you on your channel should focus on, because if you focus
Mm-hmm.
on those things as build yourself up, it's like you become basically your own type of journalist.
Mm-hmm.
Because
That's true.
I've seen most of what you do already. I've seen the videos that you make, and
Oh, thank
um,
you.
oh yeah, absolutely, and they're really good. And over time, everybody changes as a YouTuber. Like I've put out like over 2,000 or something videos. I've got like over
Wow.
44 like million views or whatever. So this is actually a fun hobby, and if you treat it that way, it really is awesome. It really is awesome. And
Yeah, I agree.
like I'm not the type of person who goes out and reads books
Mm.
specifically by these people, but I pay close attention to the news, and I pay very, very close attention to specifically international news. But I usually, me personally, I don't read the novels by these people. I
Oh,
specifically watch what they do in real life.
I got you.
Yeah.
Well,
Let me
I
see.
want I want to say something about that I actually don't really read fan fiction or fiction that much. Like, I will read things that are helpful for self-development or professional learning, and I consider investing books to be nonfiction. Like, I consider them to be helpful to help me grow as a professional who works, and to also be a better investor. And it's become something that I've really enjoyed doing over the last several years. Like, I used to be someone who I did well in school, went to college, even got a master's degree, and then I was fed up with reading stuff. I didn't want to really have to learn so much, and then I would just kind of like just live life and only maybe look at the news every now and then. And I wasn't even that good at keeping up with the news, to be honest. And then something changed where I felt like um, I felt like I needed to grow, and I was sort of not super interested in reading books, But then I was like, if I don't try to read a little bit, I'm not going to change. And I was afraid of not changing. And so I was like, let me start trying to read. And I forced myself to read, even though I wasn't really that interested. But then I finally came across a few books that really inspired me and I really felt like, you know, my by just reading some of them, like books by Tim Ferriss or other kinds of motivational books, or even reading How to Win Friends and Influence People by Dale Carnegie, or the book Influence by Robert or Richard. It's either Robert or Richard Cialdini. And then also the book The Road Less Traveled by Scott Peck. Like some of these books changed my whole attitude about reading because it made me want to be a better person. It made me want to get along with other people more and develop my interpersonal skills. And that helped me a lot in business and having jobs so that I could rise up and be promoted in my work. And I feel like because I read a book that got me on the path to more reading, and it made me want to be improving my life in other ways, I ultimately credit that to practicing this lifestyle of being an investor. And I wouldn't trade, you know, the books that got me on this path for anything. And there are even some books that I highly recommend that changed my life in how I became the kind of investor and trying to be a Warren Buffett style investor. And I recommend those too. And I did a video on that too, if anyone would like to check that out. But you know, it's all good if you don't want to read. I think that's important that you're actually watching what these investors do, what moves these people are making. And I'm actually curious how that tips you off to what kinds of things you take action with. Like, so if you're learning about some of what these people might be doing, how does that help you, or how does that make you either want to take certain actions, whether it's to investments or just doing economical or financial decisions in general?
Dijon Watson asks, how do you feel about John Bogle and Bogle Head Store Investing?
I'm not familiar with Bogle head store investing, but I think Jack Bogle did an amazing thing by basically creating index funds. Like, I think he's genius for having something for everybody to be able to invest in by having low cost index funds. And if you don't want to be a stock picker, you don't have to be. You can just get on board the S&P 500 ship or whatever index funds you like, and you're still investing. And that's what Warren Buffett would want most people to do. Like, if you don't have the wherewithal or discipline or interest to try to study individual companies and invest in those, then it's better than nothing to just be invested in index funds. So I think that Jack Bogle was tremendous, and he's a big credit to our American civilization for bringing index funds to people, because as maybe a lot of other people witness, like my baby boomer parents were invested in the normal mutual funds, and their performance was mediocre, like especially in the 80s, 90s, and early 2000s. Like, I saw the mutual funds that my parents were invested in, and I was like, this is so mediocre. Like, what's the point? And it wasn't until I read the book by Ramit Sethi, I Will Teach You to Be Rich, that I had an aha moment, and I realized that index funds were actually pretty cool to invest in. And they actually, for a while, they had me increasing my wealth. So I'm grateful for that moment in my early 20s when I got on board the index fund train, and it helped me build my wealth. And now I don't invest as much in index funds or mutual funds because I'd rather stock pick and I'd rather invest in individual companies, because I think they have the potential for greater returns. But if you had to choose between investing in cryptos or index funds, I totally would point people to invest in index funds any day of the week.
Now, you know, it's funny that this came up because I was actually going to ask this before, but I actually forgot, and then it came right back up. Did you know that now they are offering index funds for cryptocurrencies?
Oh boy. Well,
Yeah.
if 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 you invest in index funds, I encourage you to invest in public stock markets. Like the uh, I'm just a little bit afraid of what's going to happen with all the cryptos. So I mean, good luck if you win at it. It's like winning at the lottery. So then you can go on like the HD TV show, like my lottery dream house or whatever that TV show is called, where you might get like a really fancy house. But I don't know. I'm so afraid of index funds that could be leading some people to being like sheep falling off a cliff, because that's kind of what I feel like about some just sort of buying something that may not be all that it's made out to be. And when I warn about this, it could be like index funds where they're not as liquid as you thought they would be. Like, just because index funds in general are pretty great for American people to be able to invest, you have to be careful which index funds or ETFs you choose, because if we're having a big market crash and then like they're not as liquid as you thought they were, you might not be able to sell out of that position as quickly as you expected. So don't be surprised if we get like lockups, or like imagine Robinhood not letting you take certain actions. Like, I'm not saying that they're going to do this, but we've seen from historical precedent of what happened with GameStop, and even lately with some Dogecoin, where people couldn't buy more of it lately. Like, you never know if you can't get out of some of these positions. So, just kind of be careful, where you're going, because it you never know what will really happen. And so if you're going to invest in anything, I always encourage people to do research and their due diligence, like evaluate how liquid is this ETF or index fund? Like, how quickly would you be able to cash out of it if you had to? So that's just my little, warning if you're going to invest in something like that.
Yeah, and I absolutely agree with you, because I was also talking to a friend and they were talking about how difficult it can be to sell certain cryptocurrencies. So, like, I know people made a lot of money in Bitcoin and they don't want to cash it out because it's going to cost them like $5,000 in fees or something like that.
Wow.
Somebody right here, Kevin117 says nobody wants to settle for 10% annual returns. The issue that I ultimately see is most people, the reason why they're doing all this investing, especially this younger generation, I would say millennials and Generation Z, the reason why they're doing this investing,
Mm-hmm.
unlike people like Warren Buffett who are savers, and I followed Warren Buffett. I think what made me follow him was the fact that as rich as he is, he keeps buying used Cadillacs. And I paid attention to that. And then you start to learn that with you start to learn that like people his age, they do not waste money. They save.
Mm-hmm.
But when you really think about it, most of these people who are going into these cryptos right now, they're not going into these things because they are trying to they're not trying to save any money. They're trying to get rich quick so that they can buy a Lamborghini, or so that they
Okay.
can buy, and that's what it ultimately comes down to. And then I think back to with crypto, if you think about it, there were people who were crypto rich and they bought Lamborghinis and stuff with their Bitcoin, but they bought it before Bitcoin hit $19,000. So that car, if they still have it, because those cars fall apart real quick, those
Mm.
cars are depreciating assets. If they still have that car, if they had saved that currency, if they had saved that Bitcoin right now, instead of being worth 19,000, each one would have been worth 50,000. So if you assume that one of those cars is about $500,000, that 500,000 that they spent back then would have probably been worth probably about 20 million or something right now, because
Yeah,
of the
sure.
rise. So my problem with cryptocurrency is it's like a roach motel. You go in, but you're afraid to come out, or you can't
Yeah.
come out. I
Hmm.
had somebody post a couple of minutes ago. They said, I have Dogecoin, but I'm afraid to, or I'm going to sell it at $1. I was like, well, if you sell at $1, that's just stupid. You should be waiting, because Bitcoin used to be $1. It took
Well, yeah, you never
years.
know. Yeah, you really never know. And I mean, it kind of depends on a few factors. Like, it depends on where your trust is in things. And that's similar to people are showing that they're not trusting the devaluation of the US dollar, like we talked about earlier. That's why they're putting their money into crypto. So if you really believe in it, then what's the rush? If you think that it will be around a long time from now and it will be worth more than it is today, then maybe you're making a good decision. Maybe it helps to hold. But I mean, obviously not investing advice. That's how I feel about investing in public American companies that I can trust. Like I trust that these American companies will still be around in 10 years. So that's what makes me feel comfortable. Even if their returns aren't as great as they are, I feel secure that they will be around in the future and that they will have some value, that they hopefully won't go down in value. And I saw someone earlier said that nobody wants to settle for 10% returns, but actually that's what a lot of people are settling in for when they invest in index funds, when typically the American stock market's average rate of return is something like 7 to 10% over the last 100 years or something like that. So it's actually not bad. Like there's nothing to be ashamed of only getting 10% of returns. That's actually way better than hiding money under your bed or in a savings account. And I actually wanted to say something about what you said of people being savers. So actually, by Warren Buffett and Charlie Munger mostly having their money invested in Berkshire Hathaway, they consider that to be their lifetime savings vehicle. And you know what's amazing about that is that it's still growing and that it's still pretty stable and that it does generate some returns every year, even if it's not as high flying as some of the other meme stocks or some of the big tech stocks right now. But you can rest assured that if you are a retiree, you don't have to put your money in bonds. You could put it in something like Berkshire because that's where the 90 and 97-year-old Buffett and Munger are putting their money in. They feel comfortable with it. So I actually think that it's a great idea. So when Berkshire is more on sale, I plan to be doing exactly what a lot of boomers and older people are doing and continuing being a saver. I actually really enjoy being a saver. And actually, there's someone else on YouTube I follow closely who is named, a lot of people I'm sure know, Graham Stephan. And he right out and said in one of his main videos that's on his homepage that he's always liked saving. And I feel that way too. So there's nothing, wrong with being a saver. It just depends on how much risk you want to take. And I happen to be a saver. Like if I had to choose, I'd rather play it safe and be a saver than be someone who is a gambler and speculating on things because I just don't. When I lose money, I feel really upset at myself. Like I kick myself if I'm at the grocery store and I forgot to, use a coupon or something, and then or maybe the next day it goes on sale. I'm like actually unhappy at myself that I lost money by paying more. So, given that I have such strong feelings about losing money, that's why I tend to operate the way I do and why I try to really do my risk analysis on public companies that I can believe in because they're not as volatile as some of the cryptos are. So being that they're more of something that I can predict, that's what I feel comfortable with investing in.
Red Coco asks, what are indicators for a stock market crash? Some have said it's a combination of a strong dollar plus unstable treasury rates plus no inflation. Thanks. In my opinion, some indicators for a stock market crash is it's Monday. But that alone, right now we are in unprecedented times. There's large amounts of unemployment. But even worse than that, I was always warned underemployment was more dangerous than unemployment because the problem is with underemployment, things become even more unpredictable. Right now, we are experiencing massive underemployment, and you see it in that people are saying, I'm working 2 and 3 jobs. I can't afford my bills. I can't afford my health care. I can't afford my rent. I can't afford X, Y, and Z. I can't afford children. You're
Right.
seeing the number of births. You're seeing the number of
Oh
live
yeah.
births pulling
Yeah.
back. You're seeing childbirth decrease. That
I
right
know.
there tells you the strength of the economy. Those things tell you the strength of the economy.
Oh
Um,
man.
Go ahead.
You
Go
know,
ahead.
that means we're like, oh, we might be turning Japanese, as in like ending up like the Japanese economy, which would be so sad because they've been having this happen to them. And and if it weren't for the Japanese government basically buying their stock market, like I think they own like 5 or 10% of the stock market. Like if it wasn't for that, Japan's stock market would be like maybe still going down. but they're dealing with this of having a declining population and a lower birth rate. And I don't want America to end up like, as much as I love Japan, like I visited there and I totally love Japanese
What
everything.
part did you visit?
I've been to Tokyo and Osaka, and I actually learned Japanese in
Are you
college.
part Japanese?
No, I'm not Japanese,
I
but
stayed in Shinjuku.
oh,
Loved it.
nice,
Loved it. Loved it.
nice. Yeah, but so to answer Red Coco's question, from my opinion, I think what's gonna make the rooster come home to roost is having a lot of debt that someday when the interest rates go up on that governments and corporations will not be able to afford. And that's what's going to maybe cause a bit of a crash. And it could be a combination of a lot of things. Like there's more risk taking with derivatives. We saw with other things going on, like certain hedge funds like Archegos, them taking on certain risks and getting money from different banks that all thought this was, risk adjusted was a good deal, but it ended up not being a good deal. And when everybody wanted to take their money out, it ended up being a bad situation. Like, I think it's going to take something like that, a combination of factors of interest rates going up and having corporations and governments struggle to pay back the debt. And then people finally not being as interested in the stock market, and maybe there will be other things that they're more interested in putting their money in. Like maybe more people will put money into cryptos or real estate or gold or commodities. And that's what could happen. Like, and if we see, depending on how badly we see inflation, I mean, we kind of saw what happened in the late 70s and early 80s, where because we had crazy inflation, the early 80s ended up being one of the best stock market buying opportunities of a lifetime. There's actually another investor that I follow closely named Phil Town, and that's where he made his first million, was being an investor in the early 80s. So who knows what really will cause the stock market crash? Like, really, nobody knows what will make the straw on the camel's back break. But if anyone out there follows also Chamath Palihapitiya, I think that's very fascinating. I know he's got like over 100 million Twitter followers, and he's got some interesting opinions too, like that I think are worth considering. And he said back in 2019 on a podcast to some folks that he thinks what's going to cause things to really fall apart is the sheer amount of corporate debt. So let's see if he's right in a few years, if having so much corporate debt on the books is going to be the straw that breaks the camel's back, and if we end up seeing a stock market crash as a result of all of this debt. Like, so we'll see. Keep tabs on what happens, and if Chamath ends up being right.
Shinobi says she's right. If you're 40 and up, 10% is great, but if you 20, take more risk now while you can. I think I'd probably get to this question. Buffett and Munger, I don't think that they were very happy about Robinhood, and I can kind of understand why. I'm pretty sure they think that this is gamification of the stock market, because
Mhm.
even like I started like as I came out strong against Robinhood because I didn't like what I felt that they were doing. They were basically getting kids into GameStop,
And
and
confetti, and
yeah,
like all the confetti flowing when you buy a stock, and then like it makes you
confetti.
think like
I
I
bought
should
stock.
buy it more.
I didn't see any confetti when I bought it.
Oh, really?
Yeah,
Like
they must have
I
stopped
heard
doing it.
about this, that like if people take certain actions, like I've never had Robinhood, but I thought that if you take certain actions that you might see confetti streaming down on the app, and then it reinforces this game logic of you're being rewarded by taking a certain action, and therefore you should do more of it. Like, it's fascinating psychology. I mean, the brilliant thing about Robinhood is that they are able to play into this gamification desire. Like, who doesn't enjoy, every now and then I'll play like old school Windows 95 pinball and like bust that out, because who doesn't enjoy seeing like um, the points go up, and you know collecting points is fun, right? Who doesn't like collecting points? And if people feel this way about the stock market and they just see the numbers go up and up, then like it's gonna happen. Like, so what else do you feel about Robinhood that you're kind of thinking that they're Buffett and Munger are being hard on? Like, what else
Well,
do you
no, no,
feel?
no, 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 no. I'll say it like this. Have you used the platform at all? Just so
No,
you'll know what I'm talking.
I've
Okay.
I have never used Robinhood. Everything that I've said about it is just from what I've vicariously observed from others and what other people have written about it.
Which platform do you use personally?
I like using TD Ameritrade and Fidelity.
I use TD Ameritrade. I came off of E-Trade and Scott Trade. Scott Trade got bought by TD Ameritrade. TD
Right.
Ameritrade got bought by Charles Schwab.
Hmm.
So here's the thing. Now, so basically, I have two ways. I have two things to say about that Robinhood. First of all, as I said, and this is aside from Buffett and Munger, I felt that yes, it was a gamification of stocks. When I bought into TD Ameritrade, or actually when I bought into Scottrade, I had to put in $500 of my own money. And
Mm,
me having to put in my own money makes you understand that, yeah, this is real. This is not a game.
hmm
Robinhood allows you to get on completely free. So
hmm
they claim that their goal is to democratize stocks and to make it so everybody can do it. Okay, fine. But the thing that I had a problem with was when I saw what was happening with Reddit, and that they were basically getting these kids to, for what I felt was a pump and dump. And it looks like that's exactly what it was, because the mastermind behind it he was an insider, and he never told anybody he was an insider. So as far
mm.
as I was concerned, it always was a pump and dump. The problem was, it was when you're using social media to pump something up, it can be so vague that the SEC doesn't come and knock on your door right away. So I was arguing with people as to whether or not it was even a pump and dump.
Well,
Now, as well,
who was the insider? Unless you say.
the guy Roaring Kitty.
Oh, you
Roaring
think
Kitty.
Roaring Kitty was an
No,
insider?
no, no, no. He was an insider. They found out that he was a professional stock trader. Because,
Oh,
in my opinion, when I first heard of the logic of what they were doing, I was like, "Wait a minute! Do you watch the show Billions with Showtime?
no, I haven't.
You
No.
you should really, if you like binge watching some shows right now while Billions is not on the air, you should really watch that show. I'm sure you love it. It's on
Hmm.
Showtime. But here's the thing: when I heard the logic of a short squeeze and what they were doing with GameStop, it occurred to me that none of these kids are smart enough to come up with something like that. None of them. So I said, listen, somebody on the inside knows where the weaknesses are, and what they need is enough money to attack those weaknesses. So what they did was they did this short squeeze. Now, Reddit used Robinhood traders in
Mm,
order to get as much money pumped in as possible in order to do that short squeeze. I knew it was going to end badly. What I didn't realize was how quickly it was going to end, because I had heard them saying, we're going to push this to $1,000. It never made it past 483. And by the
mm,
time the government intervened and they put the brakes on it, and by the time the Europeans intervened and they put the brakes on trading of international American stocks, I figured that they were putting those brakes on just long enough for those hedge funds to be able to cushion themselves enough to be able to set themselves apart from the fire. Now, as for Robinhood, and this is what I'm going to say to you personally, you should open a Robinhood account. One reason why I will say you should is because, just like, most stock traders, diversity is everything. That's the reason why normally I never would have owned cryptocurrency, but now I'm saying, just like Stephen Graham was against it too, and then he decided, okay, I'm going to put up to 10% of my portfolio possibly in cryptocurrency, because even Kevin O'Leary told him, all of your portfolios in real estate. You're not diversified. Kevin O'Leary had a couple of shows with him. So
mm.
Stephen Graham said, okay, I'm going to buy some Dogecoin, I'm going to buy some Bitcoin, I'm going to buy some Ethereum. Sure enough, from the time that he bought into it, it has risen. Now,
Yeah.
that's also because Elon Musk was pouring money into it, and that's also because a number of other businesses were pouring money into it. Other than that, the Generation Z and the Millennials are pouring money into it. Now, as for you, you might as well open up an account, because when you open an account, they actually have a free stock, and they have you to choose eeny, meeny, miny, mo. There's three choices, and you don't know what either one is. I guess that's how they make it legal. And you pick it, and it gives you one free stock. I ended up getting something in Spectrum Pharmaceuticals or something. I got a pharmaceutical company as my free stock. And on top of that, whatever you choose to trade with it, if you so choose to trade with it, they offer you a free Robinhood debit card. And
Oh,
basically, I spent $0 getting the trading account and getting the free stock and getting the debit card. So here I was 100% against it. But when I was like, well, listen, you're giving me this free stuff, I might as well take it. So
yeah, I mean, I guess, but I think you're making a great pitch. Like if anyone out there wants to take advantage of free stocks, there's so many platforms doing this. Like if you watch any Graham Stephan video, he'll also pitch you real hard about get your free two stocks or whatever it is. And same you could do with Robinhood. Like granted, it could be nice. Don't get me wrong. Who doesn't love free stuff? Like I always love free things, but it's a little bit on a matter of principle that I try to not even join this. The same way that I'm not interested in gambling in a casino, I'm not interested in getting sucked into a world of Robinhood. And it's also why I don't do things like fantasy football. Like I don't do the FanDuel or I don't do anything like that. And that's just my personal preference. Like I'd rather just not kind of get into this gray area of potentially gambling, because I almost feel like Robinhood is like a gateway drug. Like it's, how they say, back in the 80s or 90s with Dare, and it's like, this is your brain on drugs. And it's like, they have
yes,
the picture of
you
that
know they
egg,
don't show those commercials
scrambled
anymore.
eggs. Yeah, but it's like the commercials like, this is your brain on drugs kind of thing. Like, do people realize that if their brains are wired into this like kind of gambling mode, that becomes your new normal? So, just like Dare, like I'd rather just like not even try it, like not even kind of like get anywhere close to something that could be a gateway to worse behavior. So that's how I try to keep myself disciplined, is just not even, I just like stay out of the casino to begin with.
I hear what you're saying, and speaking of gambling, you probably have noticed that now the New York State Lottery has an app, so you don't even have to
Mm,
leave your house to go to the gas station to buy tickets anymore. They have an app now, and I
wow.
totally understand. I totally understand what you're saying, but what I will say is this: as a disciplined trader, I think me using it. I think I'm less in danger of gambling with it any more than I would be with my TD Ameritrade, because
Mm,
I'm a disciplined trader. Now,
yeah.
what this is the reason why I was against it, because
Mm,
of all the undisciplined traders who, exactly as you said, were
hmm.
going to make really bad financial moves. Because as I said, anybody like somebody right here put, because what I used to mock the GameStop Redditors. I used to mock them, and I was screaming, "Yeah, hold the line!" and I was making fun of them. And oh God, here somebody
Diamond hands. Who's got
diamond
diamond
hands.
hands?
Somebody's asking me right
Got
now
diamond
to do it.
hands?
Do you mind if I go crazy for a second? Do you
Yeah,
mind if
whatever
I
you want
go?
to do.
They're donating money and they're asking me to say it. So okay, I got to get into the mode. I got to get into the mode because I see people love it when I do this. They love. Okay, all right, wait, okay, all right, okay, because I have a special voice and everything. Okay, I'm about to do it. I'm about to do it. Okay, so let's see. Let me just see where the prices are, so this way I can do it naturally. Okay, so they love this. They love this. See, this is one thing you'll learn as a YouTuber: when you let your personality really come through. That's when you get the most dedicated subscribers. Let me just see where they. Oh, okay. So right now, GameStop is we're at $159. Everybody, diamond hands, we're gonna hold the line. Hold the line. Everybody hold the line. We're gonna get on a rocket ship. We going on the way to Pluto. We're going to the moon. We're going to Jupiter. Everybody, hold the line. Hold the line. Don't sell. Don't sell. Don't sell. Everybody stop. Stop. Do not sell. Hold the line. Hold the line. Okay, now I got that on my system. There we go.
And I was like almost mimicking you a little bit. I was
Right?
like,
He
your
said, okay, thank you.
enthusiasm rubbed off, and I wanted to like live that too. I was there right with you.
Oh, believe me, like it works a lot better for me when I don't see myself on the camera. But I tell you, I was having so much fun mocking them because the thing about it was when it went from 483 down to like 2 something, I was like, listen, guys, I told you, don't do it. Don't do it. Don't do it. I called it a pump and dump from day one. I told all of my friends, do not buy into this. But see, the problem is the fear of missing out.
Oh, yeah. FOMO is real.
FOMO is real. FOMO will have you cashing out your bank account to get into some damn Ethereum.
Well, and you know, that's what I try to do that's different than a lot of other people. If I miss the boat, I'll be like, you know, next time. Like, you know, you miss a train, you catch the next one. Like, I don't, you know, like that's the equivalent by people doing what they're doing in FOMO reaction. That's like them jumping into the subway rails and running after the subway and then getting electrocuted. Like, don't FOMO yourself into kind of, you know, annihilating your hard-earned money. Like, you know, this is part of what's going on in our American society. Like, history might not repeat itself, but it certainly does rhyme. I think someone said, I forgot who, but when history rhymes, that's like when, you know, no one ever thought that the great financial crisis would end the good times in all the real estate buying that there was and everything that came before. And don't get me started
I'm sorry,
on the dot-com bubble.
Not to cut you off, but that quote that you just gave, history doesn't repeat itself, but it rhymes. I didn't even have to look that up to know it was Mark Twain.
Oh yeah, that one. Yep. So like, but like, you know, most of us, and I was like just a little kid playing with Pokemon cards when the dot-com bubble burst, and I'm glad I kind of still own those Pokemon cards, even though I'm like not trying to do anything with it. But it's like kind of bizarre. Like I remember when I traded something for like a first edition Charizard card, and then this kid and the dad had to talk to me, and they were like, oh, you know, he really didn't want to trade that card, so I had to like trade it back. So now I don't own a first edition Charizard card anymore. But like the crazy thing is, around that time in 2000, the dot-com bubble was bursting. And you know, like if we think about what happened back then, I know a lot of us have not seen like money being lost, but I know some baby boomers who lost tons of money back then. And I'm just trying to avoid that happening to me. So that's why I'm trying to play ultra safe. And if Warren Buffett is sitting in a ton of cash, I don't think that I'm any better than him. I'm going to do exactly like what Buffett is doing by just chilling out and just enjoying the movie. I'm pulling out my popcorn and just watching the show because I'd rather not be losing my money, losing my shirt on all of these meme stocks or some of the cryptos. Like, if you're comfortable with potentially losing a lot of money, then all the more power to you. That's not the game I want to play, though.
You know, unfortunately, the amount of money that they may have been comfortable losing, a lot of that came from stimulus checks. So they weren't worried about it. You know,
well, it went to someone else. Whoever's on the other side of that trade, that person's getting richer.
And most of them will get left holding the bag. Anybody who bought into GameStop above $200 was left holding the bag.
Well, and I gotta say, like, if you sold, and if you sold when he was like crashing back down to earth, you were none the wiser. Like, and that's where I actually differentiate myself. I consider myself an investor, not a trader. So even though I've dabbled in some options before, that's the extent of trading I've ever done. Like I don't like buying anything and then selling it right away. It's not very fun to me because I could be wrong. Like I could buy one thing 1 minute and then, you know, there's this like, you know, invisible psychological rule that's like as soon as you buy something, it will go down. And I'm sure that's happened to all of us where like, you know, you just buy something and then the next hour or the next day you're like chicken back and you're eagerly looking like, where is it performing now? And then you're like, darn it, like I shouldn't have bought that electric vehicle stock. Like, why can't all the electric vehicle stocks go up, right? Like, I'm sure that's happened to a lot of people, but um, you kind of you kind of just gotta know yourself. Like the most important thing is whether you like being a trader or you like being an investor. The most important thing is you got to know what you're comfortable with. You got to know what types of risks you're willing to take and know what you're getting into. So it's totally fine if you want to gamble. Like Buffett doesn't shame you, but like Charlie Munger's like he doesn't like the professionals who are taking the suckers' money. Like that's what really comes down to. Like, so I know I would be pissed off if like whoever's making money off of me is like, benefiting at my plight. And that's what's gonna sadly happen with a lot of people who are speculating in a lot of stuff, is like someone else is gonna make tons of money off of the people who lose. And I know that I'm not gonna be in that boat when that happens because I'm not trying to be in the markets that way. So yeah, like I wonder what do you mean, Devante? What am I enjoying about this?
I think he was talking about me doing my routines. I think
Oh
that's what
yeah.
I think he.
Oh yeah. Yeah, John, your that routine was amazing.
Oh my God, you have no idea. You should see me. You should see me on a regular day. You should see me on a regular day
Well,
because
maybe I can because you're a hop, skip, and a jump away from me. So maybe we'll meet up for some mimosas or something.
oh yeah, that would be absolutely cool. That would be absolutely awesome. I tell you, I'm always like, see, the thing about it is, I can go from being like absolutely crazy to being like totally professional and calm. By the way, you said you had gotten a master's degree. What did you get your master's in?
In biomedical informatics.
So you got it in biomedical informatics. Do you work in medicine?
No, I'm not, but I used to work in healthcare technology.
Oh, okay, that sounds great. That's
Yeah, it's a
really
good
good because
field.
I think everybody notices you sound very well read, you sound very well studied, and you seem like you could talk just like me. You could talk about this for days.
Yeah, I will. Like the interesting thing is, someone asked me, why did you get a master's in that and yet you have a YouTube channel all about personal finance and investing? It's because I feel like this is sort of a calling. Like I just feel really passionate about personal finances and trying to help other people make the right decisions for themselves. And, like I think about when I go to places like Costco or grocery stores where I see an old lady working, I don't want to end up like that. So if I can do something to influence other people, whether it's my friends and family members or new friends from YouTube and other places, I want you to be financially secure because you're part of our future. And as much as people might be kicking the can down the road and there could be all this gloom and doom in the future and someday the good times will end, I don't want us to be all financially ruined. Like, I don't want millennials and Gen Z to be a lost generation. So that's why I care. That's why I want people to be as successful as they can be when it comes to investing and handling their personal finances. Like, I feel really strongly about that because I was lucky to have older cousins who set me straight and they told me what I should do when I was 18. So I made a video about that too. And I was able to get on a path of being financially secure. And I feel like I'm really close to reaching financial freedom. Like I'm not there yet, but I feel like I'm able to thrive. Like I don't have any student loan debt. I don't have any real credit card debt. Like if I have any balances on my credit cards, I pay them in full every month, unless I take advantage of a 0% APR for like 12 or 15 months. And then I just let it sit there for a little bit and then pay it all off before there's any interest applied, because I've never paid any interest on any of my credit cards for as long as I've had them, over a decade. Like so I'm pretty fortunate in that I like saving money and I like doing the right thing when it comes to paying my bills. I've never been late on any bill. And that's just me. I know that that's not common. Like I know that I don't see this kind of trend of people who are weird at 18 and they open a Roth IRA like I did. Like I might be one of the few weirdos who did something like that, who as soon as I was 18, I was like, it's time to start investing for my retirement. Like, so let me get on this is saving up for my retirement. And it's probably not normal. Like, it's probably abnormal for an 18-year-old to be thinking about what am I going to do when I'm 65 and 70. And you know what? Like, the sooner that all of us save for retirement, the sooner that we will avoid ending up like an old lady working at Walmart who has no choice but when they're 75 to be like stocking the shelves and their teeth is falling out. Like, who wants that life for themselves when they're in their 70s? And even though there's been some reports saying that we're starting to not live as long as our baby boomer parents and older people did, like, for the first time ever, the millennial generation might not live as long as baby boomers did. So it's like, I don't want to end up like living less of a fulfilled life as my predecessors. Like, I want to be able to have a nest egg and be able to have a comfortable retirement and live just as long as my grandparents did, and have a good life. And I would want that for other people, because it would kind of suck the more unequal our society becomes. And if we have more, like rising inequality, it's not great where the rich just keep getting richer, it looks like, and then the poor just keep getting poorer. That's why we're having so much divisiveness in our country, is because of the extent of inequality and not wanting to help each other out. So I'm all about trying to help out my fellow peoples, and I want you to be as financially secure and be able to thrive and not have like this gloom and doom of debt over your head. And also, like, don't even get me started on the student loan crisis of how so many millennials really got cheated in taking on so much student loans that maybe they didn't have to if they had a little bit more financial literacy about what it really meant to sign your name or your parents' names onto student loans, because there are still so many millennials and their parents who are still dealing with so much student loan debt. And it's a really big deal, like over $500 billion of student loan debt that millennials still have. So yeah, like I feel super passionate about trying to help people out and having a future generation that's not lost.
Well, I will tell you this, especially when you talk about the next generation. Generation Z, as we've already seen, like Generation Z has a lot of issues, because here's the thing: I was born in '81, and we were very disciplined in ways that Generation Z absolutely is not. One of the reasons why you see Generation Z specifically having so much problem with the police is because Generation Z does not comply. They have no discipline. They don't comply with orders, and from not just the police, but from any adult, their parents, their teachers. When I was in school, if you didn't do what you were told, you were getting spanked by the teacher. The teachers had rulers. We were getting paddled. There are still states where corporal punishment happens, but this new generation after me, nothing like that happens. In fact, in many cases, their parents do not discipline them properly or punish them. And the problem is, you have the immovable force versus the unstoppable object or something, and they come together. And now Generation Z has a problem on every front. They have the police, they have the banking system. If you don't have the discipline to pay off credit cards, and you're making the money, and you don't have the discipline to spend properly or to save properly, you're going to have financial problems, and it's inevitable. This is why I was saying, when you're talking about the possibility of a lot of them ending up as, indentured servants for one, and a generation of renters for two, who in most cases cannot possibly hope to get. Because you think about it, Generation Z right now is probably between like 18 and like 25 or something, right?
Well, I think they were born starting like either 96 or 97, and then maybe ending 2012 or so.
Yeah, the exact numbers I don't know, but they're probably about 20 something right now, right?
Yeah, early 20s.
Yeah. Early 20s. Okay. They are going to be in direct competition with you and I for everything, for space, for housing, just as our generation, millennials, has been in direct competition with the boomers who've been living longer, who've been not, because you got to remember, I used to sell houses for Capital One in 2006, 2008, right?
Mm.
Before we had the crash. Their equity in many cases was stripped bare. So a lot of them were underwater on their homes. So when I went to get ready to buy a home, I was in direct competition with people who couldn't sell because they had no equity. When you sell a property, the way that the system is built is based on the logic that you're going to marry in your 20s, you're going to stay married into your 50s, you're going to be paying off your house, you're going to be retiring by the time you're 60, you may move on.
Mm-hmm.
The problem is we have people marrying later, families starting later. They're putting people into 40-year mortgages now. A 40-year mortgage, because that's the only thing that they can come up with to refinance people to keep them from being in mortgage foreclosure and forbearance.
Oh, okay.
So yeah, that's a thing that's happening. They're trying to refinance people and stretch out their loans in order to make it so that even though, yeah, this $200,000 house is going to cost you $500,000, the bottom line is at least you won't get kicked out, and this is going to go back into a negative asset on the bank's books. So what I'm basically saying is I'm worried about Generation Z, and I'm worried even more for Generation Alpha,
Oh,
because
yeah.
the
Well,
financial
yeah.
the financial breakdown that we have going on right now, let me tell you, this is not something you climb out of. You don't get out of 30 trillion. We're spending what? $61,000 per second. You don't
Yeah.
get out of $30 trillion of debt. And the student
Well,
loan debt
yeah.
is only going up. When the government told me that refinancing my student loans was going to cost me what, like 6.85%, I got a second job and I started YouTubing. I paid off my student loans in record time.
Well, it's awesome. Yeah.
But
Yeah,
we're
like,
fortunate.
well, yeah, like, and I try to work hard. Like, I had student loan debt too, and I worked hard to save as much as I could to pay it off. Like, I prioritize paying that down, but some people might be okay with having student loan debt if they have other priorities that they need to handle first. And if people can get a low enough interest rate on it, then like we talked about earlier with inflation, that eats away the value of the debt. So, it's sort of like what are you more comfortable with? Like, I love living a debt-free life, and I wouldn't trade that for anything because I never have any cloud of worry in that regard. And you know what I feel about Generation Z? Like, I actually don't consider them any competition, but I feel a lot of compassion for what they must be going through. Like, it's been so hard. Like, the first batch of some of the Gen Zers graduated into the pandemic, and like, I actually did a video about comparing who do I think might have had it worse, and I didn't pass judgment on who I think had it worse, but I created a chart in my like video about trying to succeed as part of hustle generations of where the millennials, a lot of them graduated at the height of the Great Recession. And now similarly, we have Gen Z graduating into the pandemic recession, or if we're not in a recession anymore, there's probably not one far away in the future. So, we're probably going to get double hit, and millennials are also going to get slapped with, another future downturn at some point when, like you said, it's already people are delaying having kids and delaying getting secure housing and all of this. And I just feel really empathetic because as millennials, we've been there. We know the pain of what a lot of Gen Z are going through. But the difference is, like, I remember a time when I did play on the streets and I didn't have, I mean, I had Game Boys, but I wasn't so plugged into the internet all the time. And I think that's also what's maybe worrisome in the future is, like, we also have people, like when you say Generation Alpha, and they're probably like those who were born after 2012,
Babies.
like, yeah, the babies, like, people now don't have other recourse than to pacify the babies and the young children with iPads and tablets and all these streaming services that are on all the time. And yes, it works. You get the kid to stop crying, but how is that setting them up in the future? And I wonder if some of that type of effect, where like Gen Z mostly grew up always being plugged into the internet. And actually, like Wall Street Journal actually did a video about how there have been incredible effects of social media on the Gen Z kids, where there's more anxiety, there's more depression, there's more, like incidents of, I might even have to say, like there might be more teenage suicide as a result of some of the negative effects from social media. So if that's happening now, imagine what will happen in the future with Generation Alpha. Like, I can't imagine what that feels like. So, I try to unplug from the internet every now and then. Like, so sometimes you may have noticed, like, I don't get back to, like, I might not have gotten back to you right away. And it's not because I'm trying to be, not getting back to people, but sometimes I try to unplug and I try to do other things. Like, I go for a run, I try to exercise, and you know what? I don't bring anything with me that's plugged into the internet while I'm going on that run.
You
Like,
don't
I'm
listen
not.
to music?
No, I'm not. Well, sometimes I listen to music, but I actually use an old school iPod to do that. So that's not plugged into the internet. Like every now and then I'll run with that, but I like actually running with just listening to nature, like, and saying hi to my neighbors. Like, I just want to be reconnected back with nature because it's a way to kind of get rid of some of, the feelings that you get from being too plugged into social media sometimes. It's like, I just feel this sense of peace and calm when I'm reunited with nature. And, that's why I don't always try to bring technology with me when I'm on a run, is that like, you'd be surprised how much being in nature and outdoors, like I'm a big outdoors kind of person, and how much that actually boosts a lot of things for you. Like, you have less anxiety and less all kinds of negative feelings when you're doing things that are fundamentally healthy for you, like getting exercise and a good diet and good sleep.
Yeah, no, I totally agree with you. And hearing you say things like that, it's like I think like when I go to the gym, a lot of times I spend too much time because I use my phone as my main media player, and I, got the wireless headphones and everything. And I've noticed both myself and most of the people around me in the gym, they spend a lot of time staring down at their phone while they're supposed to be doing stuff. And I totally hear what you're saying. And just to clarify, when I say that we're in competition with Generation Z, what I'm saying is, especially not just with the housing situation, but a lot of us are staying in jobs longer than we should be staying in those jobs. Like a lot of us should, like for instance, in 10 years, I'm retired. To hell with this.
Oh, that's
I'm
great.
out.
Good
10 years.
job.
10 years. I
Nice
got
work.
my pension set up. I got my healthcare plan set up. I got
Nice.
my stocks. I got this, that, and other. So my thing is, there's a lot of people who I see right now, and you see it too, who are older than us and they can't leave those jobs, and they may have low end service sector jobs that normally teenagers should be doing in order to build the discipline for financial literacy. Because
Mm-hmm.
as far as I'm concerned, me personally, I honestly do not believe that it's I don't believe that it's practical to teach financial literacy to kids.
No,
However,
really.
no. I believe that kids will start to understand financial literacy the earlier they start working. Because when
Okay.
they start working and they think that they've added up how much money they should be paid, and then they see how much comes out in taxes, that starts the ball right there. Because I've taken economics class. I learned economics. I've had parents, they try to explain things to you, but all of that goes in one ear and out the other. You're a kid. You're not supposed to have responsibilities. But
Well, yeah, maybe.
but let me just clarify. I'm not saying that we shouldn't teach financial literacy. I've done my best to teach people about building credit and this, that, and other. The problem that I see is, again, just like I was talking about crypto, most people just want to get rich quick because their intention is to spend more money. Their intention isn't to save. Their intention is because I need my money now so I can buy X, Y, and Z. I want to buy a house and a Lamborghini.
Mm,
My thing is, with kids, I think kids, if parents would stop giving them stuff for nothing, and if
mm.
parents, like for instance, if I have children, I'm going to probably put a chore list, and I'm going to be like, hey, guess what? If you want $10 for allowance, you got to clean the bathroom. Or if you
Yeah.
want this, if you want $5, you have to clean your room. It has to, like, I have to spot check. Like, too many parents, like you were talking about the iPads, the iPhones, they are pacifying these children by just giving them stuff.
Yeah,
And
exactly.
anything to get them to just shut up and leave me alone. I need my peace. That's
Mhm.
what they're doing. And they were saying that these things are giving these kids digital autism, especially
Oh,
like if you were to look at a lot of the distance learning, most of the kids, they don't like, just like you and I are talking face to face with a microphone and a camera. The kids don't use their camera or their microphone, and in many cases, they're in their bed sleep. Teachers are talking on the camera to themselves, and the kids are sitting there sleeping. Nobody knows because you can't see the other side.
mm.
Most of them can't have a face to face conversation because this whole thing about digital autism, that was the term. They're saying that at a certain point, if you're spending so much time staring at computer screens, you can't recognize facial expressions.
Or also you're disconnected from humanity, and even that's another thing. Like, older generations used to talk to each other on the phone all the time, and nowadays a lot of young people don't talk to people anymore. They just text, and
Right.
that's like the extent of their interaction, and it's become a lot less personable and kind of sad in a way. And I just wanted to remark, because I saw a couple of comments. I don't know who Lynn Alden is, to the person who mentioned that earlier, but I'll check her out. I think if Lynn Alden is a her, as I'm assuming that name is. And then I saw a note from Gabe that music from Gen Z. Yeah, I don't know. I feel like I really enjoyed music that came out right around like the late 2000s, early 2010s, and that's been my jam. Like, I still listen to electronic dance music from that time. Like, it's been hard for me to get into some of the music coming out lately. So I don't know what it is, but even though things were kind of bad during the Great Recession times, like at least millennials got to party and dance to fun music.
So, by the way, like I mentioned to you about if you wanted to share your website, if you want to share your website with me so everybody can see it, because some people were asking, "Oh, like what's your website?" I if you want to
Well,
share
my
your
website
YouTube
is michellemarki.com, just like my
channel,
name.
can you bring
And
it
I
up
think,
and share it to me? I
yeah,
could share it myself, but okay.
yeah,
I mean,
you
either
seem
way.
more in control if you want to,
All right,
because
Michelle. Okay, so MichelleMarki.com. I think I looked at it before. Okay, MichelleMarki.com. Oh yes. Okay. Yeah. Let me bring that up. Um. Let's see. How do I do this? Oh yes. 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 So in a week, what's your week like? What do you do in a week?
well, besides my day job, so a lot of times, because I'm trying to get better at my YouTube channel, and I'm trying to work really hard putting together good content that people would like to check out. A lot of times I'm reading up on lots of stuff and trying to get better at making videos and improving on my, Final Cut Pro editing skills. And like I said earlier, I'd like to read books nowadays. So I'm trying to read books. Like, the next book that I'll read is called Rebel Allocator by what's his name? Jacob Taylor. Sorry. So Rebel Allocator by Jacob Taylor. I'll be reading that book, and maybe I'll do a video about what I learned from it, because even Charlie Munger gave him a call about what he observed from that book. So I'm curious, what kind of book it would take to have someone as famous and legendary as Charlie Munger give you a call. So I'm hoping to learn some insights about how to invest from that. And otherwise, like, most of the time, I'm just trying to keep learning how to be the best investor I can be, and really try to study companies. So that means reading 10K annual reports from companies, which can take a long time, or reading Warren Buffett's annual letters. And I'm still catching up on them. I haven't made it through all of them, because it's like reading the Bible. It's like there's over 1,000 pages of Warren Buffett letters to read through if you really want to try to get through all of them. And then otherwise, I'm a big outdoors and sports person. So my typical week, I'll be trying to exercise, and I try to, get a few runs in. And if I can play sports, like I enjoy playing tennis with people. And usually I'd be playing rugby if we weren't in the middle of the pandemic still, I'd be playing rugby in New York City. So, it's a good time to, try to develop, self exercise routines. I used to do CrossFit. So my week is usually filled with just trying to practice investing. And when I say practice investing, that doesn't mean that I'm always buying something. It means that I'm actively learning all the time, just like how Warren Buffett and Charlie Munger are continuous learning machines. So that's what it really takes. Like, if you want to be a good investor, you always have to be learning and always have to be willing to put in the work and discipline. I mean, I'm sure that's the same thing that LeBron James has said to people as you put in the work, or like Kobe Bryant. Like, I admire those two guys. And, I guess every now and then I watch sports too. And even though I'd rather
What
be
sport do you
playing the
like?
sports,
What sport do you
well,
like?
I'll watch basketball, sometimes football, soccer, tennis. I'll watch like college sports sometimes. Like,
Let me ask you a question. Who's your favorite tennis player?
my favorite is Roger Federer.
Roger Federer. I was gonna,
Yeah.
me personally, it's Naomi Osaka.
Well, she's badass. She's awesome. I like her too. And yeah, so that's my week. I mean, I keep busy. I mean, between everything I said, between trying to keep up with my investing, my day job, and exercising and living life in general, seeing people, like, that keeps someone busy. And my website, as you can see here, mostly dedicated to my YouTube channel. So often what I do is I try to also write out what I talk about in my YouTube videos. So if anyone wants to read what I wrote to reinforce some of the lessons that I tried to convey, they're also in my blog. So you can if you scroll over to the blog part, you'll see that it features basically a dedicated article to each of my YouTube videos. So I feel like that can be helpful to people, because people might be uh, visual learners, and that they like watching something, but also reinforcing it by reading. And then I tried to put together a couple of like free resources that I feel like are helpful, like how I think that people could win at retirement by saving with their Roth IRAs, and my understanding and my review of retirement accounts like 401k. So people could check those out too. And also, people could save up for their medical expenses with health savings accounts if you qualify. So I tried to like share as much resources about what I've learned through a lot of my own trial and error in my website and my YouTube channel. So I hope that will be helpful to people. Like I just genuinely want people to be the best they can be at investing and their personal finances. Like, I really don't have much of an agenda. Like, I know some people might be doing affiliate marketing, and then they'll be like, hey, check out my Amazon link to check out this book. But you know what? I'm not trying to make you spend more money. In fact, like, I'm totally all for your local library. So instead of spending money, why don't you go borrow some books that you might be interested in from your library? And that way you save money, and you get to benefit by enriching yourself through knowledge and education from books and other media that could be helpful to your life. Um, so yeah, like, I really hope that what I'm putting out there can be helpful to you. And like, I feel like I was lucky to have older cousins who got me on a good financial path. So I want to be like that figuratively to other people, and be like your figurative older cousin, and help you get on a good path that you feel like you can be more disciplined about your personal finances. And hopefully the wish that I would have for people is that they learn how to invest in a good way, like whatever way works for them, but as much as possible to try to be investing rather than speculating.
Now you say older cousins a lot. Are you an only child?
No, I have younger siblings actually, but I didn't have an older sibling myself. So being that I'm the oldest, the people that I turned to were my older cousins, because they they were just around in my life, and they were able to tell me about their experiences in investing and what their parents also went through. So I think that it was really helpful to be able to have that sense of support so that I could learn.
I have a younger sister, only about 2 years younger, and she's actually a criminal defense attorney. And
Nice.
she's, you're altruistic, trying to keep people on the straight and narrow path of financial literacy. My sister is a straight up gambler. So
Ah,
like I try to shield her away from herself. Like I'm telling her, it's like, listen, there's cryptocurrency, but like I don't really think you should go into certain things. My sister will go out and buy a bunch of Ethereum. So right now she's thousands of dollars up. And she was saying, oh yeah, you should have told me about Tesla earlier. And I would have gotten
ah,
into Tesla. And I was like, yeah, but listen, I didn't want you to take the same risk I did. But oh yeah, you should have told me about that. So then when I told her about Chinese electric vehicles like Li and Xpeng and whatnot, she buys into them, and then she blames me if they're not performing fast enough. So it's like, oh, I don't want to tell you nothing now because you got to keep blaming
yeah.
me.
I
But
mean, and that's the delicate thing you gotta worry about is like, I'm not trying to tell anyone to buy any certain stock or anything like that. If you wanted someone to tell you what to buy, you get a financial advisor because they're supposed to have the responsibility of educating you properly. And sometimes they have fiduciary duties where it's in their best interest to be in your best interest for you to do the right thing. So, you know what? Like, let the gamblers be gamblers and let the investors be investors. Like, whatever floats people's boat, whatever makes you happy, because that's what you got to do. Like, a lot of people live their lives trying different diet plans and all kinds of fad diets and whatever like thing that they think will be the magic pill to get them to, handle with their weight. And you know what? Sometimes the answer is just do what makes you happy. Like I eat all the carbs in the world. Like I can eat lots of pizza slices. And you know what? I'm in a pretty good weight. Like the funny thing is like so many people are like now they can't eat gluten and they can't eat xyz thing, and I feel like that's so sad. Like people didn't used to be gluten free so much or whatever, and I feel like a lot of people who have put themselves into this straight jacket are really unhappy. So you know what, you gotta like do what makes you happy. Like you gotta figure out what you can believe, and if your sister's happy doing what she's doing, then great. But she shouldn't blame you unless you were really making her buy something. But like it would be better if she didn't blame you for what you were probably trying to help her do the right thing.
yeah, well, it's funny. As I said, she has way more of a gambling habit than I do. Now she justifies it by, I guess, getting decent returns. So that's how she justifies her gambling. And something I was going to ask you, because this may actually apply to both you and her. Do you own a house or do you rent?
Well, I'm actually renting right now, so
Renting. Okay.
yeah.
Yeah, have you
I'm,
considered
but
buying into a
I'm
house?
saving up for a house like someday.
Okay, yeah, no, because see, here's the thing. I was trying to explain to her that well, obviously when you're renting you're paying somebody else's mortgage, but when you buy your own house you're paying into your own equity and you're actually getting something back at the end of the day. But with her, I guess what it is she lives in close proximity to her court. So for
Mm-hmm.
her, that area, because this is New York City, all the values have gone up so much. But if she had bought something earlier, it would have been cheaper. But no, I
Right.
was just wondering that. I was just wondering that about you, because when you were talking about the fact that you were debt free and everything, I was like, oh gee, I wonder, did she buy a house or is she renting? But listen, whatever works, saving up is fine too. That's really good. My thing was, I prefer to actually buy real estate, because this way I never had to actually worry about not getting anything out of it or being evicted or anything like that. No, so I just wanted to know that. But I
Yeah, well,
try to
I
keep
mean, you're
her.
right. I mean, I totally like if I had more money, I would have bought real estate much sooner. And as you probably know, the tri-state area is super expensive. So, it can take a while to save up enough to buy a house in this area near New York City.
Especially now.
Well, yeah, so I'm not even worried. Like I'm not even trying. Like I'm not going to compete with any corporation or other people who are willing to pay cash and bid up the asking price. Like I'm not going to go there because it's not worth it to me. Like I'd rather just be saving up that money and not worrying about it and waiting until it's the right opportunity, because like I don't need that stress in my life. Like there's some people who say, they're in agony for someone outbidding them and they can't get a place. And it's like, who needs that stress? Like, I don't need that in my life. I'd rather just have a peaceful life and just be doing my thing. And, like I feel pretty happy. Like, I don't have any anxiety or stress or anything. Like, life is good.
Not many people can say that, and you do strike me as somebody who's like got that Zen calmness.
It's really all about trying to achieve self-actualization. Like, I talked about this in my very first YouTube video about trying to have a Warren Buffett like mindset and mentality. And I adapted Maslow's hierarchy of needs to like a sort of financial investing hierarchy of needs. And in this, like, maybe as you still have that up, let me see if I can bring it up myself to maybe I'll be able to share this, because I think it's super important as a way to sort of think about where do you want your life to go and your finances, and if you think that you're on track to getting there eventually, or if you will never rise up in this pyramid. And if people don't know what Maslow's hierarchy of needs is, it's a basic psychology theory about, like, most of us have basic needs of needing to get food and have shelter and whatever it is, like to kind of like get by in life. And then you gradually rise up in Maslow's hierarchy of needs, and hopefully you try to reach your full potential someday, whether you have your dream job or you are debt free or whatever it means for you to reach your full potential. So let me see, how do I, oh, nice. I love how you said that, Shinobi, about that. You've met sweet types that will tackle you. I've brought down some big girls before. It's kind of hard because I'm not super big, but it can be done if you use the right technique. So, maybe in the future I can share some more stuff about my glorious rugby days before we had COVID. Let's see. I'm trying to figure out. Okay, let me see.
All
Share.
you do is push share, and you share either a tab or whatever, and then I have to accept it, and then it'll come up.
All right. I'm going to see. Don't show tips again. What am I sharing? So, am I sharing? Don't know.
Let's see. Oh yeah. Okay.
Not yet.
Wait. No.
Let's see.
Nothing on my end yet from you.
Okay.
There it is.
All right. Sorry about that. I haven't used StreamYard before. My bad. So with this investing personal finance hierarchy of needs, like what I consider is if you have lots of debt and whatever you owe on that debt and interest payments, if that's more than what you bring in income, whether it's from a job or other sources of income, I think that this kind of person is in a crisis stage, and that's not a good place to be, like, because you can't even like survive. And I feel really sad for people who might be in a crisis way of living. And if you don't know that you're in a crisis way of living, you might be in this kind of place if you are racking up the debt, and if you don't have the self-awareness to know where you stand with your finances, chances are you could be in crisis. And I really hope that you can get out of that. And if actually, if anyone wanted to talk with me about any of this, like, I've totally talked with some of my friends and even people who I don't really know, like alumni from my undergrad, and I talked to them about their life situation. So if you ever wanted to chat with me about what's going on, send me a DM at my Instagram, Michelle Marki, and I'm happy to listen and try to offer my feedback. Like, it's not really like super advice, but if I can be helpful to you and try to at least listen to your story, and if you wanted any suggestions, I'd be here for you if you ever wanted any of my feedback or help. So I just want to put that out there because I really don't want people to have to suffer, and if I can lend anything that's helpful to you to try to get out of any crisis stage, whatever you need, or if you're dealing with mental health issues, like, I want to help you out if you're out there and you need something. So next, like, if people are just surviving, that's what I consider a lot of people to be in. They're just getting by. That a lot of people don't have a lot of money saved up. And like if you didn't have, like what Warren Buffett said, like a few years ago, people couldn't even come up with $400. And it's been a wonderful thing that people were able to get stimulus checks and were able to, afford medical emergencies, or if their car broke down. Like if you're someone who was able to handle, really pressing bills or emergencies with some of those stimulus checks, you might just be only barely getting by. And, it's maybe not a super comfortable place to be. But maybe, if you're able to get an emergency fund, which could be like your basic living expenses of 3 to 6 months worth of living expenses saved up, and you're starting to have some investments, like you're starting to contribute to a Roth IRA, then maybe you're in a safe place and maybe on the verge of growing, where starting to be on the right track. And, even though you might still have some debt going on, you're starting to go in the right direction. And I feel like I'm in the thriving stage where, I feel like my life is pretty good. Like I don't have any debt. My spending is super manageable because I live below my means, and I'm accumulating assets. So, I feel like I can be thriving, but I'm not yet in a place where a lot of people call financial independence and retiring early. Like you said, I mean, I feel like I have a hunch that you might already be in a state of financial independence, John. Like I know you said you're not going to retire till 10 years from now, but I think that you've probably already achieved financial freedom because, like, from everything you're telling me, like you've paid off your mortgages, you are on track with all the diversified income sources you're bringing in. Like, I think that you're there. Like, you've probably achieved fire already. So I hope that I can be like you someday, and maybe you're also mentoring me a little bit, but through us talking right now. So I'm grateful and thankful that you're talking with me. So then, if anyone had questions on this, I'll stop sharing this for now. But like, feel free to check out my first video if that might be helpful to you to learn more about my ideas on this and how to try to get on the right path.
Yeah, well, see, ultimately, it's funny. I'm the type of person that even when it comes to those MLM and pyramid schemes that you see pop up all the time, I actually will listen to their pitches because I like to hear what they're saying. I'll listen to people. I like to hear what they're saying. And the thing about it is the whole idea about financial independence, it's like, it's not as hard, I think, to achieve certain goals. Like, for instance, for me, one goal was paying off my student loans. And then the next goal was improving my credit. Now, I'll tell you, I honestly didn't think I would get to perfect 850. I thought I was going to end up stopping at like 800, but it turns out that when you have mortgages build you up that much faster. I didn't even realize it.
Yeah, you're right.
A lot of times you can hit goals without even really trying.
Yeah, but, as long as you've set up the right mechanisms to get there.
Yeah. So my only thing is, it's like, just like you, I've tried to be altruistic. Like there's like a lot of these gurus on YouTube who try to charge people money for advice and courses. I refuse to do any of that. I refuse to pay for any of that, because the thing about it is, a lot of that is self-aggrandizing. You're paying them to make them wealthier, whether they know what they're talking about or not. I give out free advice if people choose to listen or not. Just basically like you, it's altruism. So my only thing is, it's like, as much as I try, I've noticed, unfortunately, that the people who speak the loudest are the ones who actually are basically just out there showing off and calling themselves gurus. Those are the ones who end up getting the most views, the most clicks, because people are focused on the materialism. So unfortunately, that's what it is.
It's a bit of a cycle, and you know what? Like I don't fault people. Like if people want to do, their right and prerogative to do the capitalistic thing, all the more power. Like I know that's a way that some people have gotten really wealthy, and it's okay. Like I'm not trying to find fault with that, actually. Like someday, like I really hope that my YouTube channel takes off and I'm able to do well and earn some of that YouTube revenue. That'd be really fun. And I'd be super grateful because that means that it can help me help out my parents and my family members. And that's really important to me, is ultimately helping out my loved ones and also helping out my friends. Like I want them to have financial security. So that's what I'm kind of hoping for, is that like by trying to help become the best investor I can be, that I try to be able to help other people down the line and pay it forward to other people who are also trying to come up. Because I think we need more of that. I think we need more people helping out each other. And I think it's, it's okay. Like, if you have valuable content that someone has to pay you for, it better be valuable and it better be delivering on what people are paying for to get to get their money's worth. It's the same thing with like, anything. Like if you have a membership to somewhere, like a gym membership, you better be getting the value to that. And I see what you mean about how if someone is calling themselves a guru and if they're just full of it and they're not truly delivering the value, then that's not a great situation. And I really hope people, don't stay too long, because eventually, you'll see if the emperor is not wearing any clothes. And eventually, I believe in karma, and there's power in the universe, and karma will go around.
No, absolutely. But that just happens to be what it is, and YouTube is really good at breeding that. I think it kind of started with Ty Lopez, and then it continued onwards. And people that the free, I always believe the free market's always right. If people understand how to market themselves and other people want to watch them, then that's just what it is. And as for you, I showed you a little bit about StreamYard. I hope that you'll use StreamYard. Maybe you can do your own interviews of people, and as long as you use it for certain amounts of time, you don't even have to really pay for it. And hopefully that can help you and your channel out. Maybe you could do videos talking about, your car. Some people like cars for whatever reason. People
Oh,
like cars.
what I would love to get
What?
is a Jeep Wrangler. Like
Really?
that's my dream car. Like I don't need a Lambo.
I
I
have
just
the Jeep Grand Cherokee SRT.
nice.
I,
I
I'm
like
not I'm not really into the Wrangler, but
ah
because it's not as fast. But
oh, okay. Well,
but
I
I
see,
like women love
I,
Wranglers.
because it's an outdoors kind of SUV. And what I remember, I said I'm an outdoors person, so I love going snowboarding. So, I like to save on things like restaurant food. Like I might not eat out as much so that I can afford my snowboarding. So that's what I like to do. So if I were lucky enough to be able to afford a Jeep Wrangler someday, then I'll try to use that to go snowboarding with, because I would just love to put my snowboard up on the rack of a Jeep Wrangler, maybe go a little bit off-roading, or if there's massive amounts of snow, or if I'm in a mountain, like the Wrangler should be able to handle it. So that's actually my dream car. I don't need to, get my Beamers, Benz, and Bentleys. I'm happy if I were to be able to get a Wrangler someday.
No, I hear what you say, and especially the outdoors nature. I've noticed Jeep people are very outdoorsy people. Like most
Yep.
people will be driving around with their windows up, and I'll have my windows down, and
Or yeah, and I've seen people like who have some Jeeps and they don't even have doors and their legs are sticking out on the side of the Jeep. I'm like kind of like worried for them if like a truck were to come by and take off their leg.
yeah, I've noticed that a lot, and I've noticed that Jeep people tend to be they're very outdoorsy people, and I guess I feel a little more outdoorsy, and that's been my favorite truck ever. And
Good.
the Wrangler, they just made them a little bit faster. They put a V8 engine in them, and I think the price went up. But yeah, but Jeep Wranglers, it's like, yeah, my dealer sells a lot of those things. He just sold some of the new ones that came with the V8 engine. My only thing about them is because they have those really big wide tires, they're not really that fast. They're just really good for off-roading.
Uh-huh. Makes sense. Yeah, I mean, yeah, like I wouldn't be it this is not the type of car that I would use to drive in cities and stuff like it would be like my adventure truck.
Yeah, like I was going to show you. This is a picture of my truck right here. A Jeep SRT. So it's pretty fast. It's fun to drive. It does
Nice.
everything. I love it.
Yeah, yeah, it's cool. I
I
like it.
don't have the roof rack though.
No, that's okay. Maybe I mean it's only if you really need it. Like, oh, and I also like mountain biking, so I I'd probably, if I had a SUV rack, I'd stick a mountain bike on top of it. So yeah, all those kinds of things. And you know what? Like aside from my strong desire to help my family and people I care about or causes I care about, I also want to, how do I say this? Like if I were to have financial freedom the way that I'm envisioning it, like I would just play for the rest of my life. Like to Warren Buffett and Charlie Munger, they consider investing to be like playing. Like, and even though they're just sitting around reading and they're playing bridge and what looks like doing old man stuff, like all of that is fun to them. So my idea of fun is if I have financial freedom, I can travel the world and keep playing sports and keep snowboarding and skateboarding and like I'm all about the just living outside kind of life. And like to me that's the ultimate fun. No, like I know you can drive a Wrangler in the city, but it would just not be living to its full potential, remember? So I talked about the Maslow's hierarchy of needs, and a Jeep Wrangler's full potential is lived in the outdoors, like ideally in the mountains. So it would just be, you know, it's a Wrangler that's like it's like me biking with a mountain bike in the city. Like the mountain bike is not as fast and not as like, you know, um, good to be using the mountain bike tires in a city landscape. Like it's designed for being in the forest or in rocky terrain. So yeah, it's just, you know, it's about trying to apply the best purpose to it.
Yeah, I've never really done mountain biking, and I've never really done much extreme winter contact sports either. I've never done the snowboarding thing. Um, yeah, but no, but that's cool that you do stuff like that. I just haven't really had that opportunity. I know some of my friends they go. Yeah, I think even my sister does stuff like that. She's gone skiing and stuff. I've never done any of that. I think what, huh?
No, that's cool. Like, you know, whatever you enjoy doing. I mean, it looks like you're really passionate about flying and cars. So I think that's pretty awesome.
Yeah, yeah. My extreme contact it's in a totally different direction.
Or maybe you could drive some monster trucks, you know, like when there's like
Some
those
people have suggested
monster
that.
truck rallies, like that'd be kind of fun, right?
There's a new truck that I had put on my channel for some videos. It's called the TRX. So they basically what they did was they took one of those really big Ram trucks, they lifted it up even higher, and then what they did was they put like 3 times as much inner power into the engine, and they
Wow.
made a supercharged truck that is gigantic by all measures. And I'm like,
Wow.
you know what? I can't even buy something like that because you can't drive those things in Manhattan. It's like you're talking about the Wrangler in the city. This
Yeah.
thing is like 3 times the size of a Wrangler.
Oh yeah. Like you probably couldn't even get down the West Side Highway on something like that.
Well, you
Like,
could, but you might take somebody's mirror off.
yeah, yeah, I know. Like, I mean, it'll be like the movie Mad Max.
Exactly. Yes. Or yeah, the new Mad Max.
Yeah.
Yeah, exactly like that. But you know what? I don't know about you and having to work tomorrow. Are you doing distance work or are you actually going into work?
Yeah, a little bit of both, hybrid.
Oh, okay. So yeah, I don't know. I don't know. So is there anything else you'd want to say? Because I know we've been on for 2 hours 37 minutes. I know I've used a lot of your time, but
Well,
everybody seemed to enjoy having you.
well, I'm so grateful, and I didn't realize that we've been talking for so long because it's been really great speaking with you. And you know, I actually want to ask you a question about have you ever featured some of the trucks or cars in your videos and then done like a tax write-off with them? Like I know from watching some of Graham Stephan's videos, he's done that with like things like where he said he only bought a Tesla for $78 and from all the rebates and the tax write-offs and whatever, all this stuff, he was able to like max out the value of that or like a Ford GT. And you know, he features some of them with oh thank you, and he features some of them in his videos. So I'm kind of curious what you think about that, about having cars or trucks in your videos and then using them as sort of like a business tax write-off, because I feel like that's a brilliant idea.
Well, here's a question: has your YouTube account been monetized yet?
No, no, I would have to reach 1,000 subscribers and 4,000 watch hours first.
Well, hopefully people are joining with you, and hopefully they can help you to get to your goal. But the thing about it is, on YouTube, because of the fact that YouTube, when you're monetized, they give you a 1099 form for taxes. Cars that I buy, I write off a lot of the expenses as business tax deductions for work, because basically YouTube, they consider it a type of journalism by the IRS. I've been doing this for years, and I have a CPA. And on top of that, I write off business trips. I basically write off anything I can. I keep all my receipts. I keep all my receipts, and everything that is write-offable, I write off. You
That's
believe
awesome.
me? Now, as for somebody buying Teslas and stuff and paying like next to nothing for them, the rebates that they offer on electric vehicles right now, on some vehicles like Tesla can't offer them anymore, because at a certain point you run out of those tax rebates. But like on the newer EVs, like the Mustang and the Volkswagen ID4, on some of the newer ones, they give you some decent tax write-offs. So a $55,000 car might end up costing a little less than $50,000, or $60,000 might end up costing a little less than $50,000. Now, there's a lot of smoke and mirrors behind that whole thing. There's a lot of discounts you can get with an EV, but again, there's a whole lot of caveats. There's a whole lot of caveats, because a lot of people.
Yeah. So do you think though that it's still a good deal if you could write off the rest of the expenses of owning some of that by featuring it in your YouTube channel? Like, I think that it seems interesting. Like if it's true, like what Graham seems to be doing. Like, I mean, because like I said, he's done that with not just the Tesla, but also with the Ford GT. So you'll see some videos with him in that. So I'm kind of thinking secretly to myself, maybe I could do the same with the Jeep Wrangler someday and make it part of my YouTube channel.
You know how much a Ford GT costs?
I know that they've become much more expensive.
That the one that he has is in between like 500,000 and $1 million. But what I
Wow.
will tell you is this. What I will tell you is this: if that's what you really wanted, and you really, really wanted one of those Wranglers, buying some people have used those cars to help build their channels, especially female YouTubers. There are a couple of female YouTubers who've bought Hellcats and who've bought like Red Eyes and whatever, and it helps their channel like skyrocket. And they mostly end up blogging or vlogging about their cars. But in my opinion, just to be on the safe side, me personally, to be on the safe side, I would never buy a car just for vlogging, because the problem would be I'd always be wondering, am I going to make enough money just having this car to pay back its cost of ownership? Now, however, because you've got other things going for you. For instance, you're a female YouTuber for one, and then on top of that, you do other things. And on top of that, like, you have a regular job. So if that's what you really, really wanted, there's nothing stopping you from saying, if that's the car you want, you could buy that car, and then you can vlog on that car to help not only build your channel, but to help yourself monetize quicker. And a lot of people have done it, and they're monetized, and it's funny because especially with female YouTubers, they get subscribers faster than I do. Now, what I get, I have a lot more views than most of them. However, many of them I look at, they have 3 and 4 times as many subscribers, because obviously they have a male car oriented audience who's joining them. So, let that be a thought for you. I mean, if that's something that you want, go for it.
Maybe, like, we'll see. Like, I'm just thinking about the idea. Like, I have no idea if I would go through with that, but part of me kind of hopes that that would be interesting, because I think
Somebody
that
says get the car and wear a bikini.
I'd probably get a lot of subscribers if I did that. But like, imagine doing that, and I feel like I'm not super common because I'm trying to be really in this investing space, and I haven't seen a lot of female investors who are also having YouTube channels. Like, I've seen plenty of male personal finance and investing channels, but I kind of feel like it's sort of rare seeing women who are at least as into investing as I feel like I am. So if I'm wrong, like I've seen a few, don't get me wrong, but really big ones that have millions of subscribers, like, I mentioned Graham Seven before, and also like Meet Kevin or Andre Jick, like some of those guys, I know they have tons of subscribers, and I haven't seen yet a female who was in a similar space have that same level of subscribers. So I could be wrong. Maybe I'm just ignorant and I haven't come
Well,
across them yet. So let me know.
I'll tell you this. There's one that I do know of off the top of my head. It's a Chinese girl. Her channel's named Humbled Trader. I
Oh,
don't know
okay.
if you've seen her. And she's another Stephen Graham follower. But again, you never know. That niche could be you. And
Well,
because
and
like me,
but let me ask you, she's a trader, right? Based on humble traders.
okay, her channel, if you get a chance, it's called Humbled Trader. And
Oh,
she's
okay.
a Chinese woman, and I'm pretty sure she speaks Chinese. And part of her show was she was like, "Oh yes, don't come to my channel to watch people driving Lamborghinis. I'm all about talking stocks." Now, I will say this: I've watched her channel a number of times. Sometimes I get bored because she's basically a day trader who also has another job, and she talks stocks, but she has like 600,000 subscribers.
Oh,
So,
okay.
so the
Cool.
proof is in the pudding. People are joining her channel. She's one of them. In fact, there's another one. It's another Chinese female. But you've got the look of a CNBC correspondent. You got the look and you've got the cadence for it.
uh,
And you never know. If you live and breathe this, you never know. You could almost go to one of those auditions and get picked right up. You
well,
never know.
I appreciate that. That's very kind of you to say. And like, you know what? If that other person's a trader, she's not directly doing the same thing that I'm trying to be about. Like, that's why I put Warren Buffett in my name, because I'm trying to be an investor, like not a trader so much. Like, nothing wrong with trading, but I'm just trying to focus more so on long-term investing. So if I can educate and help people on what it means to be a long-term kind of long-term kind of investor, that's what I'm all about, because it's what the greatest of all time have been doing. Like, if it's good enough for them, I think it's good enough for me and good enough for a lot of people to just, when it's the right opportunity, to plunk a lot of money into the companies that you believe in, that you've done the homework on, and then eventually, hopefully, we reach financial freedom much sooner than having to wait until the traditional retirement age. Oh, thank you, Top Dog. That's very nice of you. Very kind of you to say that. And um, you know, I think that that's the to me. If you learn how to become a good investor, that's to me the most stress way free to live life. Like, because if you know you're secure in the right companies that you've invested in, you can afford to do random old man stuff like play bridge and read books and newspapers all day. And my equivalent of that is being able to do sports and outdoor stuff. That's when I become an old millennial, that's what I look forward to being, is just playing. Like, like one of my role models is Richard Branson. So if I can be like a female version of Richard Branson and just hang out and have fun and do cool things and throw parties, like that's what I do. Oh, and also, you know what? Maybe let me make this like sort of bold sort of statement. If my YouTube channel succeeds and if I do well, I'm inviting people to a yacht party. So if people on here, if you're on here today and you watch the stream, and if you remember me down the line and you tell me that you were part of this live stream, you'll be invited to my yacht party.
Okay. Now, and the question I was waiting to ask, I was like, okay, so you consider yourself a Warren Buffett style trader. Now here's a question. Have you ever
Investor,
considered
investor, not
investor? Okay,
trader.
investor. Have you ever considered writing a letter to Warren Buffett and telling him about yourself and asking if you could meet him?
Oh, well, I would love to meet him. Like, maybe you're right. I should write a letter to him. Actually, I'm trying to go to the 2022 Berkshire Hathaway meeting happening next year on April 30th. So if anyone wants to meet up there, I hope I can see you. because there's some gatherings sometimes that Warren Buffett randomly shows up at. So I would like totally love to meet Warren Buffett, and maybe I'll do just that. You're right. Like there is a certain magic to writing letters and a certain way of expressing yourself that is sort of a forgotten art. Like when you said you were younger and you learned how to write cursive and things, and now young kids. I saw a little bit of your video of like, you mentioned like DuckTales and people like kids are not like learning some things that maybe older kids used to learn. And like the cool thing is
Like
it's
like how to read like how to read Roman numerals.
yeah, that too. Oh yeah, and that reminds me, I'm wearing my favorite watch, and this is actually a Swatch. And back in the day, this was only like an $80 or $90 watch, and it's got Roman numerals, and I love this thing. This will probably be like people will probably be going on eBay now buying this watch, but this is my favorite watch of all time. Like even if someday I get a Rolex, nothing will come close to this because this is like see-through, and it's actually an automatic watch, so like it never needs batteries. And this thing is from 1993. Like this thing never dies. So unlike my other watches that have had batteries, like I love this thing. So that's speaking of Roman numerals, but I digress. So the other thing that I want to say when you said about like writing a letter is that like you a lot of good cosmic energy comes from that too. Like so another good investor that I admire is named Guy Spear, and he's also similar to investing like Warren Buffett, and same thing with Monish Pabrai. Like all those guys know each other, and Guy Spear is in the habit of sending personal letters to people, especially thank you letters. So maybe I'll send you a thank you letter too, John. If you give me your address, I'll send you a letter, and I'll thank you for letting me be on your live stream, because there's a certain power to sending letters to people. And if you express your gratitude and thankfulness, like I'm not expecting anything. It's just that like the universe has a certain way of kind of coming back to you when you try to do the right thing and you are genuinely grateful for things and you express your thanks to people in a letter. And like I definitely should do that, like what you said, of sending a letter to Buffett, and I'll thank him for helping me be on the right path to be the kind of investor that I think I've always wanted to be. Like when I realized this style of investing, and like it's not like I realized this when I was in my teenage years or in my early 20s. I didn't know how to be this kind of investor. Like I was just like everybody else, like either getting some books on from people who claim they're gurus and then trying to do what some of them say. And like some of it worked out. Like Ramit Sethi's book, I liked it. I thought it had a lot of good stuff, and that helped me get on part of a good path by initially investing in index funds. But then I was wondering, isn't there something else I could do, something better, where I feel like a little bit more control of my future and have the potential of earning better returns than just the stock market average? And like I said, nothing's wrong with just getting the stock market average. It's good enough for most people, but I want to be more than just good enough. I want to try to see if I can live up to being like my favorite investors, Buffett and Munger, as much as I can. So I see them as my true north, and I'm trying to go in that direction and trying to see, if I'll make it. Like, this is as much of a human experiment and trial and error where I'm just trying to figure out things too. And that's what my YouTube channel is about, is trying to figure out, like, I already feel like I'm thriving, but it would just be so much better if I could someday reach financial independence and the ability to retire early. Like that's what I'm really looking forward to. So I hope that I'll make it, and I want to try to bring up as many people onto that path as much as I can. Like I think that that's just the best feeling. And imagine like so many people flock to the Woodstock for capitalists, like in Omaha, Nebraska, where over 40,000 people normally go to this thing every year. And it's because they're grateful and they're happy that they either invested in Berkshire and it's done well for them, and it's made them be part of a community of people, of like-minded people who like to invest for the long term and like to figure out how to invest in value maybe. And I know a lot of people say value is dead, but it's, it just depends. Like you could be finding value anywhere. So, how they say, someone's trash might be another person's treasure. maybe there will be certain stocks and companies that might be trashed right now, but maybe you will find them and they'll be your gems in the future, and you'll have those diamond hands that I know a lot of Redditors, like to claim that they have, and maybe that will be you too, and hopefully I'll join you as well.
Oh yeah, well when I get rich on Dogecoin, I'll be financially savvy, right? Well, I mean financially free. What was I going to say? Wait, you know what? I'm getting a feedback from somewhere. Wait, hold on. 1 second. Ugh.
And thank you, Roscoe. Just want to say thanks.
I don't know why I'm getting a feedback, but no, you know what I was going to say. You're a Berkshire shareholder. If you
Yep.
write a letter to him, it'll probably go right to the top.
Oh, well, I don't know. We'll see. It will probably go to a secretary who's probably been there for like, a whole century, and she'll probably
Wait,
weed out the ones that she wants him to read.
yeah, like you put basically a letter next to a resume or something, and just so that they see the whole you, like they see that you got a website and this, that, and other, and say, and just say your truths in it, and you never
Ooh,
know, that could turn out really well. But the thing about it is, don't wait, because both of them are very old men, and I've
yeah,
noticed,
you're right.
don't wait. You never know
Well,
what could happen.
this is an idea of doing randomly extreme stuff, like Mr. Beast. Like I know he does crazy projects. Maybe I should do like a series about writing a letter every day to Buffett and see if he finally responds to one. I never know. Or even Munger. I'm sure Charlie Munger doesn't want mail from more people, but that could be an interesting thing. Maybe I'll think about something very different and unique that has the potential of getting seen someday.
I think if you did it, I think you'd be surprised. It just might get it just might get seen. It just might get you there, because eventually the coronavirus thing will end, and we'll be able to do meetings in person. But if he's around for the next share meeting, you never
Yeah,
know.
it'd be super cool. I'd look forward to it. And like the other thing I wanted to say is that I hope that your sister's doing well. Like gambling aside, like I hope she's doing well in saving for her retirement.
Oh yeah,
Because
no, she's doing well.
yeah, like what I wanted to also mention was there's part of why I feel so strongly about this is like there's so many women who aren't financially secure, who are struggling, and like you've heard the stats probably of how women on average make 80 cents to every dollar a man usually makes, and I feel like that's really sad. So that's part of my mission and my calling is like if I can get more women, and a lot of people know a lot of women, whether you have a sister or mom, grandma, wife, girlfriend, like a lot of people have women in their lives. And, I enjoy how a lot of YouTube channels have a lot of males that are all about the finances and investing. And I just hope that we get more women to also be interested in this topic because I think it's been something that a lot of women maybe have been scared about, and they might not have had as much confidence in themselves about how should I invest and what should I do. And that's where the best thing that I would recommend people to do is pick up this book by Danielle Town and Phil Town called Invested, or listen to their podcast Invested, because once upon a time Danielle Town didn't know how to invest, and she was just on the work treadmill, and she's just like, or hamster wheel, and just working and kind of just slaving away at work until she learned how to become an investor. And that's what I think, just by getting on this path of trying to learn how to invest and manage your personal finances, you already start becoming more free, where you don't feel trapped by a day job. And you don't feel like the only way that you can ever make money is by only working for someone else. Like you said, John, the other thing that people should do is diversify their income stream. So, whether it's writing a book or selling things on Etsy or Shopify, or, maybe you hit the jackpot with cryptos and, you win the lottery someday, basically with that. Like, but it's a great idea to diversify your income sources other than just having a day job. And that's how I think it's actually going to take that for the millennials and Gen Z generation to rise up if anyone wants to succeed, it's in your best interest to figure out how you can diversify your income streams. And also, I really strongly encourage everyone to become an investor. Like really, you might not think of yourself an investor because you might think of, oh, investors are only the people on Wall Street, and it's just those people who are doing the hedge fund stuff. And no, I actually think that all of us every day, people just investing in the stock market, we are able to be investors too. So the sooner that people start getting that into their mindset and start believing it for themselves, that yes, you too can be an investor, and say, I am an investor to yourself. Like get in front of a mirror and say that to yourself a few times a day. And better yet, make yourself a promise that you're going to be an investor, and then you'll do it. Like you'd be surprised the magic that there is in believing in yourself that you too can invest.
As far as I say it, every single dime that I spend is an investment to something, whether it's appreciating, depreciating, or non-changing. But that's just how I treat it. So
Awesome.
you're absolutely right. As far as where it goes, women in investing, you might want to do a video about women in investing because again, I told you that I've got 2 videos coming up with 2 other people, and one of them she is a British woman and she wants to talk about women investing. So when I do it on hers, if you're free, I'll even send you the link, and if you want to join in, I'm sure they would love to hear from you because she has an all female audience. I helped her get to 1,000 subs, so she just reached
Yeah.
1,000. And
That's awesome. Thank you for
yeah,
doing that.
so if you're interested, if you're free, if you're interested, I'll let you know when she's doing it, and I'll let you in on that one. But that's you see but the thing about it is one thing you got to understand, and I see it even myself with female coworkers. Men generally do more dangerous, dirtier, more difficult jobs. And women also tend to take off from work for health reasons more often than men. So in a lot of cases, it's I do see the reason why a woman would make less than a man. Like for instance, my mother's career path, I was able to do her career path faster than she could do it simply because I didn't have the burden of child care. I didn't have to worry about going to the school to deal with me or deal with my sister. And so a lot of these things, I mean, these are things that a lot of it gets swept under the rug. They don't really talk about it a lot, but women in general, they work and everything. It's just that they don't do the same level of work that men are doing. So it's very difficult to outwork a man in certain circumstances. Like,
Yeah.
for instance, you've seen women as pilots, but you've never seen women building planes. Or maybe you have seen women building planes, but you've never seen them doing that same level of work that the men are doing, especially when it comes to the dangerous portions of the job. You know?
Well, and I mean, it could be argued, like, I think that is a big part of the reason that when women have to take time off of work, whether it's childbirth or other reasons, that can affect things, that can, technically set someone back. Like I also read this book by Sally Krawcheck, who founded Elvest, and that's a statistic that she mentioned too, is that on average, women will have less earnings if they even take a year or 2 off from work. It is very detrimental. So that's why it's all the more important, and maybe part of the solution to avoid having less money in the long run. The solution to that is to start learning how to invest as soon as you can, like in your teenage years and in your early 20s, so that the sooner you become an investor and invest in the right things, the more secure you can be, so that you can feel comfortable that even if you need to take time off to take care of kids, you're not financially suffering, because if you have some other income sources like investments, that can help get you through while you're not working. And that's what I actually think can help women catch up, is that they don't have to do what men do. They just have to try to set themselves up so that they can have some more financial security than only relying on one income source, which is usually a job.
Well, but the ultimate issue, and you're probably hearing it talked about more and more But the ultimate issue ultimately, and this is something women experienced during the pandemic, the burden of the childcare specifically because of the fact that they're not in the office and they're at home, but their kids were at home too. So suddenly they had to be a parent. They had
And
to
teacher.
parent in the
And
household. They had to
teacher.
do homeschool, huh?
Right.
So,
Yeah.
so
Educate
no, but
and be
the
the
thing, and
teacher.
this is a topic for a whole nother, because this is a whole nother topic. But the thing about it is, more and more women are choosing the career track. When I was in sociology, because I actually have one of my college degrees in sociology, women
Nice.
choosing the career track are putting off marriage and childbirth until later because they're going into careers that are more demanding, careers that were traditionally male. Because they were so demanding, the man was expected to go to these jobs more often. So the issue ultimately comes down to, because women are choosing the career track over the mommy track, what ends up happening is they end up waiting longer and longer for marriage, end up waiting longer and longer for childbirth. So they may make more money, but they end up losing the time
Yeah.
because obviously the biological clock. It's very hard for them to still have their cake, eat it too, to still work that job, have children, and be a wife. They can't do it
It's
because
hard.
it's so demanding.
It's really hard for a lot of people. So, my heart goes out to a lot of people who are struggling, especially with still doing Zoom school. And if women couldn't keep their jobs because they now had to switch to full-time parent and teacher at home, like, I really hope that you get through this and hopefully things will go a little bit more back to normal. And I know we still have, a lot of issues with childcare, and that's become way more expensive. And I mean, you're right. Like a lot of women are taking longer to do the family thing, and they are in careers. And you know what? Part of that is because we have to. Like now more than ever, just to kind of get by, both parents usually have to work just to have enough money to like afford living in a good enough neighborhood, to have kids go to good schools. Like it's really hard for a lot of American families. And I just really hope that there can be some normalcy sooner than later so that people can kind of get back more on track. Like it's just been super difficult, like you said, about moms, especially women having to not be working while they need to do Zoom schooling with their kids.
Well, Michelle, listen, it's 3 hours and 6 minutes, and I
How,
I don't know what your work day, huh?
I don't even know how many people are on here. How many
There are
people joined?
47 people still watching. I think the highest we were at was about 100 and something, but a lot of them probably went to a couple other channels that went live during the time while we were live. But a lot of them are probably going to tune back in later because they can watch it as the recording is settled on YouTube or whatever. So I don't know what your workday looks like tomorrow, but I'm about to let you go. And we're really happy. Everybody on my channel, everybody seems to really enjoyed you. I know I did. And we got to
Thank
do
you.
this again sooner or later. And
Sure.
yeah, and so I don't know if is there any closing thought or anything that you want to close out with, because I'm about to let you go, and I know I'm about to go to sleep too. But
All right. Well, what I just want to say was whether you're not sure what to do financially or not, the best thing to do is just try to keep learning. Like it's better not to take any rash actions. Like we might be feeling a lot of FOMO, and that's okay. Like one thing that helps us mature and helps us gain discipline is that we don't always have to participate. You can sit on the bench. Like I'm totally content sitting on the bench if this was an analogy in basketball and I'm sitting on the bench and I don't mind coming off the bench to be like Anthony Davis and shoot the game winning three when it's my time to invest in the market and the companies that I believe in and then help the LA Lakers win a championship. So I hope that my little NBA analogy to investing was helpful, and if you enjoy my content, I hope you'll check out my YouTube channel. My name is Michelle Marki, and I really hope that I can be helpful to you. And good luck, and I wish you all well on your path to financial freedom.
Okay, so for everybody who's in the chat and everybody who donated and everybody who was participating and asking questions and whatnot, I really hope you enjoyed this panel, and I really hope you enjoyed it. And I'm going to let you guys get your sleep because I know you guys got the rest of the work week left. And again, I hope you really enjoyed it, and I intend on doing this more often as possible. So thank you very, very much for joining us. And again, thank you, Michelle, for joining us. I'm going to end the broadcast now, and when I end the broadcast, it'll just be me and you. Okay. So everybody, good night. Later.